you confirm that you can hear me?
Yes, we can
Are you
hear.
able to hear me? Okay,
Yes.
thank you so much. Good morning, distinguished ladies and gentlemen from all over the globe. I mean, it's such a huge privilege to be a co-anchor on this session. I am excited about the Nigerian Tax Reform Act coming up in the next few days, maybe from next week. And I'm happy we've got strong, experienced resource people to help us break it down. I welcome everyone here from the executives of the department, our senior pastors, members of Highland Church, and everybody joining. I like to see you go into the chat room and give me your name. Tell us where you're joining from and give us your favorite emoji. I want to see energy in the room, energy in the chat box. But a few housekeeping rules before we go further. It's supposed to be a professional meeting. Thank you, Olamide. Thumbs up to you too. So it's supposed to be a professional meeting. I like us to remain muted unless you want to speak. There will be time to do this in an orderly manner. So we will have time to speak, but for now, we'll do this one after the other. So once the facilitators are engaging us, we like us to remain muted. Everyone remain muted. Secondly, thank you, Jason. Thank you, Judith. Very good. I want to see every other person. Let's have it so it goes into our records. Samuel from Lagos, amazing. Thank you all for being here from Abuja. Wow, we're really going to have a good time here this morning. I've been seeing a number of other organizations like Wimbies break the Nigerian Tax Act down, but I guess you're in for some real hot time today because it will start from the known to unknown, and like we have heard, we are supposed to learn about this. So we look at the loopholes in the system, the loopholes to see how to avoid and to stay safe, not how to evade, where or not to look. I see you all. Thank you for responding in the chat room. Thank you for the energy. Yes, I am also giving you my thumbs up from here. So this webinar today is organized by Highland Church Business School, an arm of the Highland Church here in Lagos with a branch in Abuja. So where is Highland Business School? What do we do? Highland Business School is a department in Highland Church that is saddled with the responsibility of empowering world-class entrepreneurs and professionals for continuous development. So if you are in here, I say kudos to you. You're one of the world-class entrepreneurs that we're looking for. Okay, so why are we here? We're here to empower entrepreneurs and career professionals for continuous relevance in this ever-evolving world. Remember VUCA. VUCA works everywhere. All right. So how do we intend to do this? First, we'll be integrating biblical and business principles. No wonder we started with an opening prayer. And then you might have one or two references from the Bible. I mean, just stay safe with it. It's one of the reasons why we're here. We're also here to equip individuals for global impact. That's all we do. So you might want to connect with us after today. Recently, we had a training called Meet AI, your new digital companion, which got some real global recognition. And I tell you, we're using the lessons, our new learnings from that class in our various fields. Another reason why we're here is to help you focus on leadership and innovation as you create value in this ever-changing world. So I congratulate everybody that made it into the room. I hear that we have a number of people who didn't register but are trying to come in. I hope we're able to fix that. But for everyone who's in the room, I say kudos to you. Like I mentioned, Highland Business School operates as an educational arm of the Highland Church, which is a ministry with the mandate to raise global leaders empowered by grace. So it is our belief that every individual carries in themselves a seed for greatness waiting to be nurtured. We're here to groom leaders to take mountains of influence across all spheres, not just in the accounting field. You know, somehow tax unites everyone, both the businessman and every other person. So one more time, I'm saying to you, welcome. What are some of our values? We teach and transform lives through the word of God. Okay, somebody has broken my first rule. Please remain muted so we can do this in an orderly manner. We like the sound to be clean so we can learn as much as we can, and you can have value for your time. So we're looking for the distressed, the dejected, the indebted, and we know that they will be transformed into shining light. One more time, everybody. Highland Church is a place where everybody becomes somebody and nobody is left behind. If you got that, I'd like you to put it in the chat box. Highland Church is a place where everybody become somebody and nobody is left behind. I like to see you chant that with me. So I'm asking that you join us as part of our global.
Okay. Thank you very much, Mrs. Fasher, for that introduction of Highland Business School. Um, as we have been told, Highland Business School is an initiative of Highland Church, and I want to also use that opportunity to welcome everyone once again. And it's indeed a pleasure to be part of this important session on the Nigerian Tax Act 2025. This discussion is so relevant for every business owner, professional, and employee navigating today's evolving tax environment. Today, as Mrs. Fasheru mentioned, we have a lineup of very experienced speakers that will be talking to us about this tax rule. And we will be taking advantage of the lacuna in the tax rule to see how we can legally avoid tax and, of course, being good citizen of this nation, Nigeria. At this point, I'd like to introduce our very first speaker in the person of Mr. Richard Okunla, who will be taking us through an in-depth session on the effect of the new tax law on corporate employees and sole traders. Right now, I will be reading the profile of Mr. Okunla. Richard Okunla is a chartered accountant and tax advisor with over 8 years of experience in tax compliance, advisory, and financial reporting. He has worked extensively on company income tax, personal income tax, value-added tax, withholding tax, and capital gains tax, supporting clients through tax planning, audits, and regulatory filings. His experience spans diverse sectors, including FMCG, telecommunications, logistics, hospitality, real estate, aviation, retail, and nonprofits, with deep expertise in interpreting and applying tax laws within both local and multinational contexts. Richard is a regular speaker and facilitator at technical sessions organized by the Institute of Chartered Accountants of Nigeria, ICANN, the Chartered Institute of Taxation of Nigeria, CITN, and the Society of Women in Taxation, SWIT, among other professional bodies and business associations. His sessions are known for translating complex tax regulations into practical business relevant insights. Outside of professional engagements, Richard is passionate about mentorship and capacity building. He has trained and mentored aspiring finance professionals from over 10 African countries, helping to develop the next generation of accountants and tax advisors through coaching, scholarship programs, and technical trainings. Please permit me to welcome and join me in welcoming Richard Okunla. I'd like to state before it comes up that if you have questions, because of course it's going to be a very engaging session, please drop your questions in the chat box. We will do well to ask them after this session, and you will indeed be blessed. Thank you very much. Over to you, Mr. Okunla.
Good morning. Can you hear me now, please?
Yes, I hear you.
All right. Thank you very much. Good morning, everyone. Good afternoon, good evening from everywhere you're joining from. It's a privilege to be here tonight or this morning, right? And welcome to today's session on the Nigerian Tax Act. And specifically, I'll just be sharing my screen now. Okay, I've sent the request. So kindly grant me the access. Thank you very much. So I will be sharing my screen in a minute. All right, please confirm that you can see my screen now. Okay, I think I know why. Let me stop sharing and share again. Can you confirm that you can see my screen now?
Yes. Yes, we can see.
Okay, perfect. All right, thank you very much. So today we'll be talking about the impact of Nigerian Tax Act on employees and sorry, the S disappeared from that place. So the impact of Nigerian Tax Act 2025 on employees and sole traders as well as sole proprietors. And before we go ahead, I'll just quickly show us the table of content so that we can know what to expect, right? And just to make it more a bit interactive, also, if you can start dropping your questions in the chat box, that way we're able to address the questions immediately after the session and we don't have to spend time, trying to gather the question again. So I really appreciate that. So yeah, the table of content, basically what we're going to be covering today. We're going to be looking at the introduction to the tax reform. What are the key highlights of the Nigerian Tax Act for individuals and sole traders? What are taxable income for individuals and sole traders? And what are the deductible expenses, that is allowable deductions? What are the reliefs that are available and tax exemption available? Comparison between the old and new income tax bracket, and what are the filing required for individuals and how to stay compliant. Okay, so the objective of today's training, right? And thank you very much to the organizers, Highland Business School, for coming up with this initiative. So there's been a lot of misinformation out there. And also, aside from the misinformation, there's also the need to get prepared and get ready for what's coming in the new year, that is effectively from 2026. So part of the training objective is to help participants to understand the key provisions and objectives of the Nigerian Tax Act 2025 and its impact on individuals and sole traders. So I'm exclusively focusing on individuals and sole traders today. So we also have to identify taxable income. Please, can we all stay muted so that the background will be very good for us to listen to it again? Thank you. So another key objective is that we are able to identify taxable income, allowable deductions, applicable reliefs that we have available also. Then you're able to also differentiate between the old and new tax rates. What are the things that are changing basically? And then you also recognize the filing and compliance requirement for individual and sole trader. And finally, you are able to apply the knowledge gained to ensure accurate tax reporting and compliance in line with the current regulation, which is the Nigerian Tax Act. So quickly, I'll go to the introduction. So when we look at the image by my right, even though it's not very clear, what I was trying to depict, I tried to look for an image that talks about how the people have been carrying the government and how people have been carrying the economy and how the government plays a role in helping to push it to even go higher. So, and this is the summary of the essence of tax reforms. The tax reform, even though many people see it as a goal for the government to increase tax revenue or to, of course, to make money for themselves, the ultimate benefit is to the individuals and citizens of the country, or let's say the resident of that country. So now to help us now have that mindset and more of creating a positive mindset of what this tax reform is about, I've listed out 5 key points that kind of summarizes some of the things that we should know about the tax reform. So number one is that the tax reform that happened, or the tax laws that were recently signed into act, were aimed to consolidate the tax laws that are existing before. So before now, we used to have Personal Income Tax Act, Petroleum Profit Tax Act, Value Added Tax Act, Company Income Tax Act, and many different acts like that. So one of the aim of this tax reform is to bring everything together into one, such that we now have just one consolidated act called the Nigerian Tax Act 2025. So the second key thing here is that to broaden the tax base. So of course, we've always heard this English of broadening tax base in the politics, broadening tax base in economic discussions, fiscal policy discussion. We hear broadening tax base. So don't worry, guys. I know that not everybody on the call are so much interested in tax like that. So I know some of you just want to know, how does this affect me? So don't worry, we'll get there. I'm just giving us this introduction to also give us a broader overview of the fiscal and economic impact of the tax reform. So one of the aims or the aim of the government is also to broaden the tax base. That is, bring more people into the tax bracket. And when we say bring more people into the tax bracket, it's not necessarily those that are earning low, because in fact, most of them are exempted from tax, but rather people that are actually earning high, but are not paying anything. So part of the aim is to also include freelancers, people that will do digital, people that work with companies in the US and in Nigeria, but they are not paying any tax. They work with companies in the UK. A lot of them like that are not paying any tax in Nigeria. So another reason is to also ensure that equity and inclusivity in tax contribution. The third point I've put here is the economic diversification and fiscal sustainability. Now, the reform is also designed to reduce Nigeria's dependence on oil. So, of course, many of us are aware that everybody says, oh, Nigeria has oil. Why are we paying tax? But we are not like Saudi Arabia. So, even though we have oil, don't forget, we still end up exporting those oils for production, even though we thank God for people like Dangote that are taking the initiative internally. But I'm not going too deep into economic discussions. I'm only giving us an insight into why we are now looking at non-oil revenue, which is a revenue from tax. So part of the goal is to also increase tax revenue in Nigeria, especially because of the tax to the GDP ratio, which was very low at the time. Another reason is to ensure equity and inclusive growth. So if the tax net expands, right, and includes informal sector participants, because we have a lot of people in the informal sector that are not paying tax at all. And I think that is even one of the reasons why people are shouting more about, oh, we don't want this tax reform, we don't want this tax reform, is because many people that are in the informal sector that are due to be paying taxes are not actually paying any tax. So the burden is on a little few who are working in full-time employment, who pay the PAYE, they are the one that pay their taxes. So part of the goal is to also ensure this inclusive growth, such that, taxation reflects the ability to pay and support economic development amongst everybody. So, and finally, the ease of doing business. So changes in the tax law also helps to reduce the ease of doing business. For example, eliminating the multiplicity of taxes. For example, you don't have to be paying, before now, we used to pay police trust fund, you pay NYSC levy, pay a lot of different taxes. Everything now harmonized into one called development levy. So stuff like that were introduced to simplify the tax system. So now, continuation of the introduction to the tax reform. And I'm taking time to explain this because a lot of people just lump off everything together and they don't really understand what happened. Okay? So I think I've made a correction to this anyway. So the Nigerian Tax Act, so 4 acts were introduced. One is the Nigerian Tax Act. The second one is the Nigerian Tax Administration Act. The third one is the Nigerian Revenue Establishment Act. And the final one is the Joint Revenue Board Establishment Act. Now, all of these acts, they were existing before, but they were just revamped, or I would say they were updated to reflect more inclusive and single point information source. So Nigerian tax are like I've put here, this is help to determine who is taxed, what are the companies that are taxable, what are the rate of tax and all those things. The Tax Administration Act helps to provide a procedural law on how tax are administered, taxpayers' obligation and rights. Then the Nigerian Revenue Establishment Act, this used to be the Federal Inland Revenue Service Establishment Act, right? It's just a revamp of the Nigerian apex agency for tax collection, which is the Federal Inland Revenue Service. So it's now one of the key notable change there is that it changed the name of Federal Inland Revenues to Nigerian Revenue Service. So, and then we have the Joint Revenue Establishment Board Act, which is more of intergovernmental coordination and revenue sharing, and mostly for within state government and federal government and local government. Okay, so now what are the key highlights somebody will say, this guy, you are talking too much. Go straight to the point. So what are the key highlights for individuals and sole traders? So I've highlighted some of the key things here. Number one is that individuals and sole traders are now fully recognized as taxable person. So before now, many people used to think that, oh, if I'm doing my business, why do I need to pay tax? There was one influencer that was recently, sent a demand notice from the tax authorities. And they were like, you are owing us tax of, I can't remember the amount now, but the tax was huge. And they're like, no, did the government help me to make my money? And this and that and this. But the thing is that whether the government help you to make your money or not, tax is a civic responsibility. So, and you need to pay it. So if you live in a developed country, you know that all your incomes are even tracked. So if you think you want to escape, they will help you to estimate whatever tax liability you are owing, and they will send it to your house. So, and that is why this becomes more important. This kind of session becomes important because it helps you to know how to legally manage your tax affairs and also pay the right tax without, breaking any law. So individuals and sole traders are now fully recognized as taxable persons. Individuals earning the national minimum wage or less are completely exempt from tax. So now this word, there's a caveat. National minimum wage, at the time, I think it's 75,000 or 70,000. Sorry, I'm just trying to manage my words also. So it's very possible that in the future, if they increase my minimum wage again, it will still be tax exempt income. So take note of that. So anybody below the national minimum wage will be tax exempt. Now, residency rules. So it also clarifies the residency rule. This used to be in place, but many people just, I've seen somebody that said, oh, Richard, I lived, and this was a recent case. I lived in UAE for 2 months. I lived in Egypt for 3 months. I lived here. So the question is, how do I determine where I pay my tax? It's very simple. There are some tenets that you need to follow. So if you look at where is the principal primary place of residence, this person actually principal primary place of residence, where his family and everybody lives, and himself lives majorly, is in Nigeria. So you pay your tax in Nigeria. So a lot of things were clarified in that line also. So we also have updated personal income tax bracket. Well, we used to have a progressive tax system. So it is still progressive. The only thing that changed there is that the tax rate changed. And the tax rate that changed, many people have misinterpreted it. Anyways, we'll get there and we are able to further break it down and see, oh, this is actually favorable if you look at it very well. So let's continue. Digital assets and non-traditional income included in taxable scope. So this includes things like cryptocurrency, transactional income on cryptocurrency are now taxable. Some digital transactions too. I know some of you do not really know, but those that play all these betting and all those whatever, those gains you make, they are subject to tax. So it kind of brings a broader view of bringing everything into tax for you. Okay, so we also have streamlined reliefs and deductions to encourage accurate self-assessment. So streamlined relief in this case includes your rent allowance, includes your tax-free income of 800,000. Like I've mentioned here, it also includes some other deductible, or let me say exempt incomes too. So everything is now more streamlined. Don't forget, this is an high-level summary of the key things that changed. So if you want to read more about it, you might want to go to the Nigerian Tax Act, and then you're able to see more from, I think, section 28 downwards. You're able to see some key things there. So there is also a reduced payee for those earning annual gross income of up to 20 million naira. So if you're earning up to 20 million naira in a year, you are likely to have a reduced payee in terms of exposure. So, and then sales of owner-occupied house is exempt. When I say owner-occupied house, meaning that the house you built for yourself and you've been living there, you must have been occupying that house. So it's called private residence relief. You're able to get that. That means if you sell that house and you sell it for like whatever amount, you get a complete relief and don't pay tax on it. But not for people that are into building the house and selling it. That one, this is a different case entirely. Okay, now what are taxable income? What constitutes taxable income to me as an individual or to you as a sole trader? So the law has clearly defined the income category, income bracket. You can see this man standing with several income streams. Some of us are like that. And I think we usually encourage that in Highland Business School too. Don't just have one income stream, have multiple income streams. so that you can conveniently live your life. You understand? So yeah, taxable income for individuals and sole traders. Income from trade, business, profession, vocation. This is for people that are into sole trading, partnership businesses, you are into vocation, developing, even if you are a contractor and you are doing it as an individual, not as a company, you fall under this category. Okay. Now, all this income, this is one item from your income stream. The second income stream is employment income and pension income. So employment income in this case. And then we have investment income. So investment income can be dividend, interest. Now, I will explain some of the exemptions there, but these are the income category that a person can have. Summary, high-level summary. So we also have investment income can also be rental income. That means landlords that collect rent is also part of your investment income. So then we have profit or income from any other sources. So any other source that you have income from, one-off gigs and the likes, they are all taxable income. And then we have chargeable gains on asset disposal. So when you dispose an asset, let's say motor vehicle, for example, so there's a limit, although you can dispose up to 2 motor vehicles in a year. There's some other exemptions that are available. So, but in high-level summary, any chargeable gain from disposal of an asset is subject to, is considered as part of your taxable income. All right. So now next, tax treatment of income. So treatment of income, all income of individuals residents in Nigeria are taxed in Nigeria, except exempt incomes. So all income that you make in Nigeria, they are taxed in Nigeria, except exempt income. Now, foreign income of residents are also taxed under the Nigerian tax law. And this gives you an example of the guy that is in US that I gave an example earlier, or he's in Nigeria, but he's working for a US company. And they didn't take any tax from his income because he's not a tax resident in the US. So they just send him the salary to his account and he just take the money and then, enjoys himself. He doesn't pay any tax. Similarly, a lot of people are like that. They're in that position where they just don't know what to do next. So this provides clarity that income, you need to self-assess for it. I will explain that to us towards the end anyways. So income derived from Nigeria deemed taxable even if earned by non-resident. Yes, if the income is, so it's provide a clear explanation around if you make income from Nigeria, right? It is deemed taxable in Nigeria, even if it's earned by non-resident. So where we are unable to ascertain where the person is resident, you might just either deduct withholding tax on it, or the person provides a tax certificate to show that the tax has been deducted or paid in the home country, and they can get a relief, depending on how the situation is complex. Now, finally, we also have presumptive tax. Presumptive tax is applied where an individual does not keep adequate record of their taxes. So this has also been in place for a long time, but it's just more clarified now. So for example, let's assume that you're not a salary earner, you do your business. At the end of the year, your total profit was like 10 million, but you don't even know how you work out at 10 million. You just know that it's 10 million, right? If you file and pay tax on 10 million, they will accept it. But if they review it and find out that you should have paid more, they might send you additional letter to say, come and pay more taxes. However, for someone that does not even know what to do at all, you don't even know how much your profit is, the authority have the right to determine what we call deemed income, or they call it presumptive taxation, basically, and say, okay, based on everybody that is doing carpentry work, or everybody that is doing catering services, all of them are making a profit within the range of 7 million, 8 billion. So you should be able to make that profit. Then they will do a tax of that range and send to you. Then you will now be the one to say, oh, I accept it, I'll pay it. Or you say, no, my tax cannot be up to this. I will have to, prepare my own return and submit it. So that's what the presumptive tax basically talk about. I'm running very fast so that we can finish and have time for questions. So deductible, or what we call allowable expenses for sole traders. So Expenses that are only and exclusively incurred in earning taxable income are tax deductible. So, for example, if you do a business and you bought a couple of items towards doing that business, those items qualify as deductible expenses. Let me give an example. If you, let's say you are into sales of, I'm using individuals now. Let's say you are into provision of a service or sales of a particular item. The cost that you incurred in buying the raw materials or buying or direct costs that you incurred towards providing that service, they are tax deductible. So you can deduct them. So the government does not tax your revenue, rather they tax your profit. Take note of that. Revenue is total money you make from selling goods and services. Profit is total money that is left after you've removed the cost of rendering that service or cost of selling that goods. So let's take, for example, your total sales is 200,000. Out of that 200,000, you have used 150 to buy the things that you used in selling that 200,000. So the difference will be like 50,000, which is 200,000 minus 150,000. It is that remaining difference that will now be deemed to be taxable income. However, before you even get to that taxable income, you still have a lot of allowances that you need to consider too. Okay. Then we also mention here that capital expenses and private domestic costs are not deductible. So items like motor vehicle, somebody was telling me, oh, if I make revenue of 7 million, I'll just go and buy a car of 3 million and then I'll pay tax on the difference. No, that it doesn't work that way. So you cannot just pick expenses from the abstract and then put them into your returns. So it can't work that way. So capital repayment, fines and penalties are not deductible. So if you are paying fine, last month fine and all those things, they are not tax deductible. Fines are not tax deductible. Take note of that. Capital repayment means loan repayment. They are not tax deductible. Interest on loan are tax deductible, but the loan repayment itself is a capital repayment and is not tax deductible. So also contribution to non-approved pension. Some people will say, I'm doing, what do they call it now? They call it a job, or some of you know what I'm talking about. So contribution within your colleagues, right? Theft and contributions. Those kind of contributions are not tax deductible. They are like savings out of your eventual profit. So those ones are not considered to be exempt income or something like that. So expenses related to exempt income are also not deductible because the income from that exempt income is already not taxable. So any expense you incur towards that exempt income is also not deductible against taxable profit. Looks like it's a bit complex, but let me just simplify it that way. So then other allowable deductions include losses carried forward, capital allowances, if any, they are allowable for you to deduct against your profit. Now, allowable deductions and relief for individuals. So in the ascertainment of a taxable income for individuals, there are certain eligible deductions specifically for payments made by individuals towards the following. So payments you make towards pension contribution to authorized pension fund administrator, they are allowable. Contribution to national insurance schemes are allowable. Contributions to national housing funds are allowable. Take note, they must be actual payments because at the time you're filing your returns, you must be able to provide a receipt to show that you have actually made these contributions. So it's not just, oh, contribution to pension 8%. No, you must be able to demonstrate that you have actually paid it, except for those that are in full-time employment, whose employer would have also, remitted and they would have received a lot or something like that to show that they've remitted the pension. So interest on loan for owner-occupied residential housing, that one is also deductible. So if you have a mortgage and you are paying back interest on it, so it's allowable. So life insurance or annuity premium, if you insure your life, your family life, I think your spouse also, yeah, it's allowable. Then rent relief. So the rent relief is 20% of your annual rent or 500,000 naira, whichever is lower. So if your annual rent is 1 million naira, some people will be angry with this part, but because what they've had online is quite different from what the reality is. So if your annual rent is 1 million naira, 20% of 1 million naira is 200,000 naira. In that case, the rent relief you will get is 200,000 naira, not 500,000 naira. So the law says 20% of your annual rent or 500,000 naira, whichever is lower. So if your annual rent is now like 10 million and the 20% of 10 million is 2 million naira, the maximum you can get is 500,000 naira. So those are part of the clarity that some people might just want to get around that part. Again, I'm just picking it at high level. Now, comparison between old versus new personal income tax rate. So based on the old law, the first 300,000 naira. So after you've taken out so the old law used to have what we call the consolidated relief allowance. So that consolidated relief allowance, it is a kind of allowance that was introduced to help individuals to manage the impact of uniform cost, dependent allowance, some of you call it black tax, marriage allowance, a lot of all those allowances that we used to have in the old Personal Income Tax Act, the old one. So it was revamped in 2011 to Personal Income Tax Act as amended, and then they brought out about the consolidated relief allowance. But we don't really need to stress ourselves about trying to understand that again anyways, because it's not going to be applicable going forward. So anyways, after you've now taken that consolidated relief allowance, we'll now have the first 300,000 naira out of your income will be subject to tax at 7%. The next 300,000 out of your income will be subject to tax at 11%. The next 500,000 at 15%, the next 500,000 at 1,600, and then the next 3.2 million will be at 24%. However, the new tax law, what it has basically done is that the first 800,000 is now at 0%. So if you look at it, before we used to have 300,000 at 7%, you pay tax on it. 300,000 again at 11%, you pay tax on it. 500,000 at, so now it's now first 800,000, you don't pay any tax at all, it's at 0%. Then now says from 800,000 to 3 million, you pay tax at 15 million, 15%. So take note, before now, see, that 3 million is already falling within this category of 24%. So now the first, that 800,000 to 3 million that you earn is now taxed under 15%. Likewise, the next 3 million to 12 million is taxed at 18%. Again, before, if you earn above this amount, you are already being taxed at 24%. The only reason why people are shouting nowadays is because they don't even pay tax in the first place. So if you look at it very well, you will see that the tax rates were reduced, or let me say the taxable income was increased so that the threshold for taxable income was increased such that the tax you are going to pay was also reduced. So if you look at this 12 million, so up to 25 million, if you are earning up to 25 billion, you are likely still going to be paying lower than what is currently obtainable right now. So that is exactly what they've been trying to say, that, oh, you're going to be paying lower, but many people do not understand. So a lot of people earn below 25 million in Nigeria at the moment. So a lot of people earn below 25 million. So if you are earning below 25 million, you are likely to be paying a lower tax compared to the old tax law. Now, if you are earning above 25 million, the reason why if you look at it, you are even paying more tax is just because the income is huge. So if I do 10% of somebody earning 5,000 and 10% of another person earning 5 million, of course, the difference will be multiples. You understand? So that is why the income bracket around this 25 to 50 million is now going to be looking at if it is higher. But in the real sense, the rate is actually still lower than what was obtainable before. And finally, if you are earning above 50 million, right, you'll be taxed at 25%. So let me see if I can do a quick demonstration. I think I have about a few more minutes because this is almost close to the end of my slide. So give me 1 minute. I'll stop sharing and then I'll share a small spreadsheet. Just a minute. Okay, almost there. So I'm going to let's do this. So can you see my screen now? Let me see. All right, please, can somebody just confirm in the chat box that you can see my screen so that I'm sure that you can see my screen?
Yes, we can.
Okay, so I'm going to save ourselves the stress of the other income for now. I'm just going to focus on taxable income. So I'll just say taxable income so that I will be able to explain it. So if this is the income that someone earns, NGN, I have too many ribbons on my screen. Okay. I'm trying to move this icon that is on my screen. Okay, yeah, I've done that. So if now, let's say this is the old law, I have explained. So if the first 300,000, I don't want to be using formula for you guys, so it will not look confusing to people that are non-accountants. So income threshold. So tax rate. So we have 7%. So we have 7, 11, 15, 19, 21, and 24. And then we'll say first 300,000, next 300,000. No, 500,000, 500,000, 1.6 million. And this is for people that might not also be familiar with how the tax works. So if you look at this, I'll do something here so that we can be tracking it, remainder. So if they say out of 10 million, if we remove 300,000, the remainder will be this. So we'll bring it here. We'll say this minus, I'm trying to simplify it. So tax that you will pay, tax due is 300,000 times 7%. This is the first tax. Okay, this is our focus area. Don't worry, I'll be very fast. So the next amount, so this person now, when we tax the first 300,000, is only paying 21,000. So the person still have 9,700, 9,700,000 left. Everything we are quoting here is naira, so please take note. So next 300,000 is at 11%. So how much will this person have left now? To be this minus this. So we have 9,400 left. Then the next 500,000 is at 75%. Next 500,000 at 15% will give us this. This is the tax due on that amount. So the person has this amount left that has not been taxed. So then same thing applies to this. The person has this amount left that has not been taxed. Same thing applies to this. The person has this amount that has not been taxed. And finally, the remainder. So it says any amount above the 3.2 million, which is the 3.2 million yet. All this give us 3.2 million. The amount above this will now be subject to 6 to 24%. So that is 6, 8. So let me just do this. And then I can come here and say there will be nothing left. So if I do the total tax that this person will pay is 2,192,000. So this is a kind of very quick analysis. Now let's try to do the same thing under the new tax law. In case it is higher, so you guys will just understand, but I think it will most likely be lower. So let's change the tax rate here and the income bracket. So the tax rate here says that 0. So we say up to 303 million. Oh, let me put 15, 18, 21, 23, And yeah, that is it. So now the first 800,000 year is at 0%. So there is no tax to pay there. Then the next 3 million, so up to 3 million, is at 450,000. So you have, oh, I've not brought this in, that's why. Okay. So the next 3 million is this. Then the next 12 million. So this person is earning 10 million. So if we look at these two, let me take out this one so that we can understand better. So this person has 6.2 million left. So it falls within the next 10 million, next 12 million. Okay, so we can just say this amount here, bring it here. So you can see the overall tax the person is paying. It is reduced compared to the old law, which is this. I don't know if this makes sense to anybody now, but this is basically what the tax law is trying to say. It's trying to say that you will now be able to enjoy a lower tax as long as you're earning up to, I think, about 25 million or 20 million thereabout. You are able to just have that tax-free income. You have a more disposable income to yourself, and you're going to be paying lesser. So, but many people do not understand. They just say, oh, the tax rate is higher, and So, in summary, I believe some of us have been able to see this part now. So let's really go back to the next. And like I said, this is just high level because I have not considered even some allowances that you get. So this is high level, assuming that this is taxable income. Okay. Now I have very limited time. I have just 2 slides to go, so I'll just go back to my slide. Okay. And so what are the filing requirements? So for people under PAYE scheme, when I say PAYE scheme, that is people that are in employment, full-time employment. You don't really need to worry yourself because your taxes are being deducted by your employer. It's deducted at source by your employer. So, and it's remitted under PAYE scheme. However, it is still expected as individuals and sole traders, especially those that have sole traders and individuals who have income from other streams. Take note, sole traders and individuals, some of you are doing gigs, you are doing freelance, you are doing remote working. You are expected to prepare an annual returns. And the annual returns covers the period between January of every year and December of every year. So between January and December, take note, January 1st to December, you will now prepare a return that covers all your income and expenses within that period. Take note, expenses exclusively and only for the business only. So that is what you can deduct. Then you work out what your tax is and file it on or before 31st of March every year. So returns to include your statement of income, expenses, relief, depending on the state that you are resident in. Some states like Lagos State, Rivers State, Ogun State, Oyo State, most of them, and Kwara State, most of them are already using electronic platforms, meaning that you can now submit it online. So you might want to explore online submission to know what is expected of you. So now you also need to prove evidence of remittance of PAYE. So for those of you that are, in sole trading employment and you're paying PAYE to a staff and all those, you might want to prove that. If you have withholding tax that has been deducted, you might want to prove that also. Evidence of pension, NHF, NHS, like I said, all these deductions that are available to you, you need to be able to prove that you have paid them. It's not just accrued expense that you want to claim. It is expense that has been incurred and paid for. So it is important that you contribute to your pension if you think you want to use it to lower your tax. Okay. So, and then bank statement and receipt where applicable. They might not ask for your bank statement. They might not ask for your bank statement. However, they can ask for receipts of payment you made just to be sure that that payment is legitimate. So I'm now close to the end, second to the last. So one of the things to stay compliant is that you need to maintain proper books, especially for sole trader. Individuals, you also need to maintain proper records. Okay, so maintain proper books of accounts. If you don't have an accountant, you might just want to keep a spreadsheet. So I deal with a lot of individuals and of course companies. So you don't necessarily have to have softwares if your business is not so complicated. So you just want to keep a record of your bank statement, write out the items that are actually for business only. You're writing them out. Oh, this is the money I made for business. Keep a good record. And by the time the end of the year comes, you can just call on anybody. You can call on me, call on others or your friends that are educated or accountants that you think they know the books. Tell them to help you to prepare your accounts and submit your taxes to tax authorities. It's as simple as that. So file electronically using approved tax softwares or portals, e-tax for LIRS, and OGRS tax for Ogun State, RIS tax for River State. You can just check it out and then know what to do on those different platforms. Also, pay installments promptly to avoid penalties. So you need to pay your installments promptly to avoid penalties. Non-filing attracts fines and penalties, so take note of that. Persistent default may lead to enforcement of prosecution. Yes. So if you are defaulting, well, even though this is once in a year, if they've sent you multiple letters to pay and you're not paying, then you might be facing some, can be facing charges, can be facing penalties of close to 10%, interest on unpaid taxes and all those things. So you need to make sure that you are properly accounting for all taxes that are due. And finally, make sure you get your tax identification number. So some people call it taxpayer ID, depending on the state. So make sure that you are properly registered for tax so that you can safeguard yourself. I think even in the coming year, they might start enforcing, they've already started doing it for health, access to basic health centers and likes. So you must have a taxpayer ID, you must show a tax return certificate. So you might want to make sure that you get registered for tax properly. It is simple and it is free. Tax registration is free online. If you want to get somebody to do it for you, they might charge you a small fee for it, but you can actually do it by yourself. And finally, one of the things I didn't include here was tax ombudsman. Even though that is a bit on the other side, but we also have what we call the tax ombudsman, where if the tax authority have determined that you are owing them this liability and you don't agree with the liability and you don't have any resource to defend it, that you don't agree with it, but you know for sure that you don't agree with it based on your books, you can easily reach out to the tax ombudsman, which is the independent body set out by the government to mediate between the tax authorities and yourself. So that is also available to you as a taxpayer. I think that will be the end of my session, so that I will be able to entertain more questions and answers. So thank you very much, everyone. And let the questions start coming in now.
Wow, wow, wow. Thank you very much, Mr. Okunla, for that very insightful session. It was indeed rich and enlightening. Thanks for sharing with us the effect of the Nigerian Tax Act 2025 on employees and sole traders. That was very good. We have received a few questions, well over 15 already, and we have collated them. Please note that if we are not able to attend to your questions now, we will respond to them on the WhatsApp platform. I believe we are all part of the WhatsApp platform, believing that we all registered for this. And we can also share that with you via email you have registered with. So, Mr. Okunla, permit me to ask this very first question. Somebody is concerned about rent relief. The question says about rent relief for payee calculation. How will HR, who is computing this tax, how will they know the rent of each employee? Will the HR ask each employee to state their rent? Imagine a company with 1,000 employees. Again, HR cannot confirm the accuracy of figures submitted by employees. So the question is, how can this be managed in preparation for 2026?
Wow, that is a very interesting question. Okay, yes, and that shows the person is following and the person has been, of course, reading up on it. So there are two ways, right? And the first one is depending on the organization approach. So the organization approach means that your company, or if you are the HR, in fact, that's a good one. You might want to get information regarding each employee's rent, and that might require you requesting for their rent receipts. So I don't want to keep saying developed countries, but yes, Nigeria is getting there. So what you can do is on your payroll schedule, you can have a column for rent relief, just like we have for the consolidated relief allowance before. You can have a column for rent relief where you can insert the amount of rent that each employee pays on an annual basis. Okay, so when you put it there, you can now use that to determine whether they will be getting the full 500,000 or they'll be getting below the 500,000, and that can be factored into their payroll. Now, this is for someone that does not have any other source of income outside the PAYE employment. So the HR from organization perspective, they can do that. Now, from the individual perspective, you are also expected to file what we call the self-assessment return every year as an individual. That one will be filed on or before the 31st of March every year. So in that self-assessment return, that is where you now declare your salary. So income from salary, income from rent, even if you are a landlord and you are still paying rent, there's no problem. So income from side gigs, income from, so all those income from disposal of property, all those income that you make from every sources, you will now put them together. Then they become taxable income. So for example, that 10 million I showed us earlier in the presentation, let's say your salary was 5 million, your rent, your another income from one place, and everything like that, everything became 10 million. So that is where you now deduct that rent relief. That rent relief only applies once in a year. So it doesn't apply multiple times. So by the time you do that and you work it out, you will now have another tax figure. The tax figure you now have at that case minus the tax you have already paid on your employment. The difference is what you will now be paying to the State Internal Revenue Service. So you won't be have to pay double tax, and you won't have to enjoy the benefit also twice. So does it make sense to you? The person, anyway, I know that the person has asked the question, but that is like a simple approach to tackling that question. Otherwise, you might want to speak with your organization. I'm sure that most organizations are looking for how to, work this out, and a lot of softwares will come up very soon to address this also.
Thank you very much, Mr. Okonla. That was very spot on. I believe the participant who asked that question has gotten clarity on that. You can keep the questions coming. We have received well over 25 questions and we're collating them. But right now, I'd like to ask the question 19, which is around having a side hustle. So this person is saying, I have a small side hustle and registered my business name about 4 years ago. I currently supply only one supermarket. I recently heard that under the new tax laws, companies can't pay suppliers without a tax identification number. Also, since my business is already registered, I want to regularize my tax records. The person is asking, how can I get or confirm my business tax identification number? How do I regularize my tax obligations? How do I know what taxes I'm required to pay as a small business with few transactions? Then lastly, are voluntary pension contribution tax deductible?
Fantastic. Thank you very much for that question. Yes, this person registered as a business name. So if you register as a business name, if it's long time, 4 years ago, means that you are likely not to have added the TIN together with your business name. So what the CAC, Corporate Affairs Commission in Nigeria, is doing at the moment is that when you register for a business name or limited company, you get your TIN immediately. Okay, but in that case, if you don't have one, I think you mentioned that you've had one, but you said my business already registered. Okay, yes. So if you don't have one, fine, you can easily apply for tax identification number for purpose of VAT, right? However, and that's one of the problems anyway with Nigerian system. So you have multiple tax IDs. So you need to, depending on the state, if you are a business enterprise, not a limited company, you need to get a tax ID from the state that you are operating the business. So you know that your business name will start with BN. Your business registration number as a sole trader will start with BN, whatever. So you now use that to apply for TIN from the state. That TIN helps you to pay PAYE, withholding tax, and any other state taxes. Okay. And then you now need to get the TIN from the Federal Revenue Service, which will become the Nigerian Revenue Service. That one for the purpose of VAT and other federal taxes that you want to pay. Now, how do you regularize all these things? The simple answer is that I really wish I know that there is a customer support team in the internal revenues, but I can't really vouch for how efficient the system is at the moment. So what I will encourage you to do is that get a friend or someone that's a tax consultant. In fact, if you reach out to me, but if I'm chanced, I don't really charge for all this kind of thing. So I'll just guide you on what to do. So I would say that if you get a tax consultant that is good, they will just guide you on how to regularize. The best thing you can do is to get somebody that knows it. Otherwise, if you go and meet them directly, the problem we have is that people just, they take advantage. I mean, the tax authority themselves, and they just exploit you because you don't know the tax law. So I would say get someone that knows it and then let the person guide you. So, and then it says there's a follow-up question. I think one more question at the end. That was not displayed anyways, but I think, okay, it's something about pension or so.
Yes.
So, okay.
Go
So
on.
for the pension aspect, yes. So after you've determined your taxable profit for the year, okay, you can now contribute to pension because that taxable profit will be declared to be your accessible income. So you now deduct your pension and any other contribution you want to make sure that you have made those contributions because that is what makes them eligible. So once you have made them, you can now deduct them and they will be able to reduce your taxable profit at the end of the day. So you're able to have so you can voluntarily contribute up to, I think, about 25%. So just contribute as much, 18, 10%. If you are a sole trader, you can contribute as much as you can. So, but for individuals under employment, there might be some, restriction around how much you can contribute. So yes, that is the answer to that.
Thank you very much. Thank you for shedding your insight on that. That's very good. We have been able to collate some questions. We have matched some questions that are quite related. But let's ask this around. The person is saying, I already have a house, but want to take MRIF. I believe that's Ministry of Finance Incorporated Real Estate Investment Fund, to have more tax deductible. Will this work, and what will be the effect?
Okay. So I'm trying to look for that question, but anyway, but from what you've said, the person already has a house and wants to take more like a mortgage.
Yes, that's the Ministry of Finance Incorporated Real Estate Investment Fund.
So what was the purpose? Because for a new property, right?
For a new property.
Okay. And then, so what is the person trying to ask? Sorry, I'm asking
I think
again.
the person is trying to take advantage of relief. So the question really is, if he takes advantage of MRIF, will the deductions, because it's like mortgage, I believe, will the deductions be tax deductible? I mean, will there be some form of relief?
So the law provides for interest on mortgage interest, not the entire cost that you. So for example, if you get a loan, let's assume that what you want to get is a kind of loan finance for real estate. So if you borrowed 50 million and they say, oh, for this, we'll give you 5% interest rate annually, that 5% is tax deductible. But the 50 million itself that you're paying back is not an expense. So it's a cost that you're paying back. But the tax, so there's an advantage, there's a tax advantage to loan repayment or mortgage interest repayment. There's a tax advantage. But from rent perspective, if the person is talking from rent perspective, no, there's no tax advantage because you can only claim the maximum of 500,000, even if you have 20 houses. And just to add, in case the person is trying to venture into real estate, then there might be more taxes. So there might be more exposure to taxes compared to you trying to save taxes that you think. Okay.
Yeah. So it's spot on. So in other words, the relief is really on the interest portion, not the total costs that will be repaid as mortgage.
Yeah, exactly. Yes.
Yeah, I believe that answers the question. Moving on, there's a question here saying, on the principle of fairness, is it appropriate for a foreign direct investor who brought in USD into Nigeria at, say, when it was 1,200 Naira per USD, but exited Nigeria, I'd say when it was about 1,700 to pay capital gains tax at 30%. The person is saying this is because whatever capital gain might have been wiped off by devaluation of the currency.
Okay, so the question looks familiar because I think they asked on this space when Taiwo Idiri was having a session.
Yeah.
So the question is that anybody that goes into a market to invest is looking to make profit. Now the question is that let's forget Nigeria for one part. I'm a foreign investor and I'm based in the UK and I made an investment in Nigeria and I made a profit. Nothing concerned them with whether there is foreign exchange gain or whether my exchange went up or not. As long as I make a gain, I'm supposed to pay tax on it. So to now answer that person's question, I think it is fair because the economy gave you that advantage to make that profit. It could have also give you advantage to make a loss too, or let me say disadvantage. So I think I wouldn't say it is a disadvantage, or how do I put it now? But I would say my simple answer is it is fair, right? It is fair. However, like in most developed countries, there will be an headroom to say this particular income bracket, as long as you don't end up to this, you can take your money back in full. You understand? So that income bracket is now what we should look at. For example, I know that so some investment up to 150 million, no tax payable. So there's some investment like that there is exclusively you don't pay any tax on the gains up to a particular threshold. So you want to look at the type of investment you're talking about. If it is the one that, quick investment, you're 3 months and you make $1 billion and you say you want to pay any tax, that is it fair? Then you also need to question the interest motive. You need to pay tax on it. And besides, finally, your tax that you pay in Nigeria is a tax credit in the country that you are repatriating it to, especially if they have a double taxation treaty in Nigeria. So you might want to also consider that any tax you've already paid in Nigeria will be used to relieve your tax in other country that you go back to. So that might also answer your question of fairness in the tax system. Thank you very much. That's my own opinion anyways.
Very valid opinion, if I must say. Okay, so like I said earlier, we've matched some related questions. So in this question I'd be asking, I have matched like 4 questions together because they seem quite related. This person is asking that is a pastor that is not on a salary, nor does business qualify to pay tax? 1. That's the first question. The second is tithe taxable? 3rd, is cash gifts for upkeep taxable? Then lastly, how about contributions made by church members for church rent and evangelism? Are these contributions taxable? Interesting question there.
Okay, I would like if I can see those questions so that I'll be able to address each of them point by point. Although I can remember what you said. So first one for the pastor.
So let me ask one after the other. First, is the pastor who is not on salary, nor does business qualify to pay tax?
So the question is not whether the person is a pastor or not. The question is whether the person has a taxable income. So if you have a taxable income, you are qualified to pay tax. That's the straight answer. So whether it's a pastor, imam, whatever the person is, as long as it's a taxable income, you are obliged to pay tax. However, there might be some exemptions for diplomats. Okay. So when you are a diplomat and some other kind of exemptions, maybe you are working in the armed forces, yeah, there might be some exemptions around taxes. But whether it's a pastor, imam, traditional worshiper, as long as you have taxable income, you should pay tax. And funny enough, let me even tell you, many people that are on church payroll, they pay PAYE. Many people we don't know. So we would not know. They think that church pay PAYE for the employees on payroll. So pastors also actually pay taxes. So next question, sir. Ma, thank you.
Okay. The next question is tithes taxable?
Okay. So tithe is assumed to be a donation. Now the question is donation taxable, tax deductible? So when you say taxable, I mean person means tax deductible or tax savings.
Good tax
So
savings,
yeah, so that kind of donation, it is considered to be donation to ecclesiastical body, which a church forms part of it. As long as the church is properly registered, it's a donation to ecclesiastical body, and then it's qualified as an exempt, what do you call it now? Exempt or deductible expense, right? So the question is whether the church is properly registered as a charitable organization. So if that is the case, it's allowable. For countries, again, coming back to countries, developed countries, for example, I'm based in the UK. If you donate to church, it's completely tax deductible as long as the church is registered with Charities Commission. So yes, you can even put it and write the name of it. I donate to this church of 500 million pounds. They will just say, "Oh, well done, good servant. Yeah, no tax for you." Because so yes, it's tax savings and tax deductible for you. Thank you very much. Next one says
is cash gift also cash gift for upkeep? Upkeep is it?
So that one is a bit subjective. I can't say whether it's tax deductible or not. So because the question is whether the initial income source has been taxed. So if, for example, I gave my child, I earn 500,000 naira, for example, and I give my child, oh, you're off school, oh, yeah, take 50,000 naira. My own 500,000 has already been taxed. So that gift I'm giving my child is tax exempt. But the question is now, when I start giving my child like 50 million, is it really becoming a gift? Or am I trying to, and the question is whether my own initial source has also been taxed. So it's a bit subjective. That place, I wouldn't go there too much, but I would just say that you need to be careful of the kind of, cash gift that you're giving.
Okay. So last on that question is our contributions. I think you already touched on this a bit when we're talking about the tithe. Contributions made by church members for church rent and evangelism, are they actually taxable too? Are they tax deductible too?
So the church as a whole does not have any tax obligation because it is a non-profit body. So any donation that comes to the church are expected to be used to fund the activities of the church, including paying salaries, repairing, doing repairs and maintenance, all those things that the development needs to grow. And again, I know that these people that are asking the question are also focused on church. Please take note, the same thing applies to NGOs. Okay? So NGOs, even mosques, no matter how much donation you give to them, that is the income stream. That is the basic income stream for those organizations. As a result, the law have exclusively exempted them from taxes. Okay? So they don't pay tax on those income. And in most times, if you look at them, you see that they're even running at losses. No matter how much you give, the money will still go back into the economy. They used to develop community, do for how do they call them now? Underprivileged, give back to the widows society. So most of the income that you give to church, they are not really considered as income, taxable income. They are considered as kind of welfare to the economy. Okay, so they are not taxable to the church, but the money that the church now pays to the employees and maybe suppliers, they can deduct withholding tax, they can deduct payee and remit to the government. That one is standard. But the church itself and other charitable organization or ecclesiastical bodies or NGOs, they are tax free. Thank you very much.
Thank you very much. I believe that's very clear enough. Pretty clear. The next question I'd be asking, this person is concerned about how the government will know inflow into their account. So the question is, are savings subject to tax? And how will the government know what is an inflow into my account? How will they tell what the inflow is? And what is a saving? Let's say, what if it's a saving, I guess? Let's say I make a transfer from one of my accounts to another. So in a nutshell, the question is, how will the government know which is actually income to me for the sake of taxation?
I like that person's question. The person is genuine in asking that question. So yes, one of the misconceptions people had about this new tax law is that the government will come into my account, they will draw the money and they will just compute tax on everything, and then no, so that's not how it works. Okay, even in most countries, that's not how it works. So what the government, Nigeria operates a system of self-assessment. So self-assessment means that you are the one that will look at your bank statement and your books and say, this is income for business purpose. This one is donation I'm doing. This one is contribution. All those money that came in for all those ajo thefts, all those money that somebody said, help me to transfer this money to collect this thing, all those ones are not considered to be income. It is exclusively, so we have what we call the badges of trade. I don't want to be going too much into activities, but in simple terms, you only look at your bank statement and pick transactions that relate to income. So you can pick transactions like when you sold this particular item, transaction like when you sold this particular, you made this money from doing this side hustle, you made this money. Then also expenses that are exclusively for that purpose too. For example, you enter transport, okay, to go and deliver a particular package. You are into selling of wigs, for example. So you sell the wig, money came in 100,000, and you use delivery of 5,000 to go and deliver it. Those are the things you will bring out from the bank statement by yourself, and you now determine whether you make a profit or not. It's funny enough, many people make loss, they don't even know. But because they see every money, they think that they're making profit. So you may make loss. Determine whatever you profit you make and you pay tax on it. So nobody is coming to come and enter your bank account. And what the law has even provided, I think section 28, 9, 30 talks about presumptive tax. So if you are now unable to tell us, throughout this year, I made 18 million, even though 100 million enter your account, only 18 million relates to the actual profit. I made 18 million this year. If you are unable to tell us, the government can now say, based on everybody that is doing this kind of business you are doing, they make minimum of 5 million, 10 million. So we'll now charge you to pay tax on 10 million average. So sometimes it can be favorable, sometimes it can be not, it might be disadvantage to you. But in summary, to summarize everything, you are the one that will determine what income is by yourself and not the government.
Okay. Thank you very much, Mr. Kola. A very interesting question I have here, and this person is concerned about what the penalty for not paying tax is. The person says, for example, non-filing of CAC returns, CAC annual returns now might cause CAC to delist such a business to invalidate their legality. Now, for tax, what is the implication for not paying?
Okay, so because there are multiple tax laws, right? I would say that there is a different penalty for not filing and there's a different penalty for not paying. So let's assume that you did not file, right? I can't remember everything off my head because a lot of things have changed again. So before now, it used to be 50,000 naira for individuals and 500,000 for companies when they don't file their PAYE scheme, for example. And for individuals also filing self-assessment like 50,000, but it has all changed now. Okay. Now, for the amount that is due, but which you have not paid, there's a penalty standard of 10%. I can't recall if it has changed anyway, but I think it is still 10%. And interest on the amount that you fail to pay. So the reason why it becomes expensive is that, for example, you're supposed to just pay, let's take VAT, for example. You're supposed to pay VAT of, you're not supposed to pay VAT because there was no VAT transaction, but you forgot to file. And the penalty is 100,000 naira for forgetting to file. Meanwhile, if you had actually filed, maybe your actual VAT that you should have paid is like 35,000 or 40,000. So the cost of non-compliance is higher than cost of compliance. So I would encourage the person, don't focus too much on the penalty because it looks like the person wants to be defaulting, but focus more on how to make sure that you meet the deadlines and file as at when due. Okay, but I can't remember off the top of my head what are the penalty, but is it within the range of 10% for non-payment, and then penalty interest applies on the amount that has not been paid also.
Yeah, thank you. The person is probably trying to weigh the implications and see if there's any way out. There is no way out. Okay, I have another question. This is really just seeking clarification on the 1.2 million annual income tax exempt. The person was saying that he actually thought it was 800,000 that is not taxable, that you should please shed light on that.
Sorry, can you come again? I didn't get that clearly. Sorry.
Okay. The person is trying to get clarification on the 1.2 million naira annual income tax exempt. You know, where you explained the tax. Yeah, exactly. So the person is saying he actually thought it was 800,000 naira that is not taxable. Can you shed more light on that?
Yes. So let me see if I can quickly come up with that slide and then share with the person. 1 minute. I'm trying to look for the exact screen now. So the person should be able to see my screen now. This is where I mentioned it. Yeah, this place. So if you look at it here, it's going to be. So this is where I mentioned it here. Okay. So individual with annual gross income of up to 1.2 million, translating to about 800,000 taxable income is exempt. So the additional 1.2 million I put here is 800,000 plus the 500,000 naira rent. Assuming that the person is paying a rent that the 20% or lower is, like I've explained before. So if your 20% of your rent is let's say 600,000, then you'll be able to get the benefit of 500,000. Then that means you will not be paying tax on that 800,000 and 500,000. So I will explain. Let me just do a quick, but because of time, I don't know if we are already running behind time.
Yeah,
So
we have about 20
so
minutes.
what I would encourage the person to do is that there is a link that the federal Nigerian fiscal policy team has put up. So what I will do is I will drop it in the chat box, on this chat box, so that the person can go there and then understand the flow of how it works instead of me trying to demonstrate it again. Okay.
Yeah, because of our time.
Yes. So it is 800,000 that is exempt. The 500,000 is a kind of relief before you get to that 800,000.
Thank you. Thank you.
Right.
I can see a lot of hands raised. I think you should drop your questions because we are racing against time and trying as much as possible to take your questions. So dropping them on the chat box will permit us to collate them as much as we can and ask the related questions. I also shared earlier that if we are not able to take your questions on this round, we will respond to them. We'd ensure to respond to them and then share them with you via WhatsApp or through the email you have registered for this event with. So Mr. Okmola, I have a couple of questions, related questions here. First, maybe a yes or no. The person is trying to know if guarantees, GTE, are liable to tax.
I don't have an answer to that. when the person means guaranteed, what does it mean?
I guess, I mean, this is me just speaking of the question now. Maybe like limited liability companies, you know, you have companies registered limited by guarantee or something. So I think this is in that.
So limited by guarantee,
I
they are
guess.
liable to certain taxes. So the person might want to read the case between, now I'm going to refer you to an assignment, read the case between Federal Inland Revenue Service and Best International Children's School, FIRS and BCIL. So the school mistakenly registered as a limited liability company as against limited by guarantee. And as a result, they are required to pay Company Income Tax Act. They are required to pay Company Income Tax, even though they are in school. So you might want to read more about that case, FIRS versus BCIL and American International School also. So in summary, they are required to pay certain type of tax, but not all type of taxes. So you might want to just, I can't say more than that, so that I will not go too deep.
No, it's okay. I think that answers it. That answers it. So this first question, I think this is in line with or in relation with the question around pastors being taxable or churches or donations to some of these churches being taxable. So the person is asking to say, what happens when a charitable organization like a church owns a business venture, let's say a school? Is the income from this venture subject to income tax? or are they subjected to tax?
Okay, that's an interesting one. So
Mm.
if the church operates a separate revenue generating business, the question is whether that revenue generating business is also subject to tax. For example, if you own a school, then the church is expected to register that school as a limited by guarantee. And that way, the church would end up not likely paying any corporation tax or company income tax on the school profit because it will be used to part of the government's goal is that anybody that is supporting the government in doing its own responsibility, they usually want to give them a kind of relief. So schools generally, you see that they don't pay company income tax, they don't pay all those kind of taxes. They only pay employment taxes and all those basic taxes. Okay. So if the church is using if the church is having that kind of operation, then it will be registered separately. They will register a separate arm of the church as a limited by guarantee. If the church now decides to open a pure water manufacturing business, then they need to register that one separately again as a limited liability company that will be taxable as maybe under company income tax or under, depending on how they register it, they will now be taxed properly for that arm of the church. So it's not just about the church as a whole. So I'm sure the person that's asking this question have a lot of experience. So I would say, let me use Winners for example. If Winners as a church is a big brand, I'm using them because they're a bigger brand in Nigeria. If they have a school, they register the school as limited by guarantee, they might not end up paying any taxes. If they have a business and they register the business as, oh, okay, let's say Winners Telecommunications, and they are providing telecommunication service, they will pay tax on that line of business. Okay, so it depends on the type of business that the church is running that will now determine whether they pay tax or not. Okay, thank you.
Thank you. I think that answers it. That answers it. Okay. I have another question here. This person is asking, what's the easiest way to remit my personal income tax if I'm paid directly in USD? And is there a specific format for reporting income from multiple foreign clients or employers? Also, what percentage will I be required to pay? And will the payments be made in local currency, which is Naira?
Thank you very much. I like people that are trying to be tax compliant on the calls like this. So yes, if you have income from different streams, you don't need to disclose those different streams to the government. They are not really interested in it. What they are interested in is your total income. How much do you make in total? Now, what are the formats? Just go to ChatGPT, say, please create a spreadsheet for me to track my income from different clients, include dates, include this thing. We have AI to do those things for you. Just tell it to create a format for you. Now, copy that format, put it on an Excel spreadsheet. If you want that kind of format, I just don't want to promise anybody on the call. I have a couple of templates like that, but I don't know how you're going to get it. If I say I'm going to share it with you guys. So, but if you do on ChatGPT and put those key things there, it will create a template for you. Just copy it to Excel. All you need to track your income is the date of transaction, the person that sent you the money, what the money relates to, how much is the money, and maybe exchange rate as at that date, so that you can convert it to Naira equivalent on your spreadsheet. Now, at the end of the year, you also deduct every cost that you incurred. Okay. For example, your cost of data that you incurred, cost of traveling, if you had to travel to do the job, or those kind of things, you take them out, and whatever amount is left is become your taxable profit. Now, the person asks another question on what currency do I pay? You pay the currency, you pay the tax in Nigerian Naira. So before, we used to have a problem with, oh, we don't have exchange rate and all those things. So the law has now provided that you can pay it Naira equivalent of that amount as at the date of transaction and pay the tax. Okay. And finally, the person is asking what rate. You also follow the same rate I've explained earlier. I know you are earning high and you're afraid, but yes, you have to follow that rate that I've explained earlier to pay the tax. Thank you very much.
Yeah, thank you. Thank you. So now we have a few minutes left, and as much as possible, we'll try to touch on some of these questions we have outlined here. So if we can make the responses a bit shorter,
Okay.
so we can touch on as much as we can. This person is asking, if a vatable person renders a service to an NGO, are you supposed to charge VAT on the service?
So vatable person renders service to an NGO. So
Yes,
it
to a
becomes,
non-governmental organization.
so it honestly, it depends on the type of service, because you want to be sure that the service you are rendering is, if it's to an NGO, the question is whether I think the question is not whether the service will be vatable, because your services are vatable. We have exclusively list of exempt items, that is services that are not vatable and are exempt. So I think all you have to do is look at your list, that list, and see whether, it doesn't matter whether it's an NGO or not. Check your list. And so if Netflix is giving, I'm just using Netflix as an example, if Netflix in Nigeria, because they charge VAT, if they are issuing invoice to an NGO, they will not say because it's an NGO, they will not remove VAT, they will not charge VAT. They can't do that. So you have to apply that standard rate. It's the NGO that will now determine, okay, maybe I'm not vatable, I'm not VAT registered, I cannot charge VAT on my service and all those kind of things. But you as a service provider, please apply your VAT as appropriate. However, you can also check the list, exempt, zero rated, and there's another one, call it no VAT scheme. So look at it and then apply accordingly.
Thank you very much, Mr. Okunlo.
Yeah.
The next question here, as a sole photographer whose business is not registered, but we have an admin who works with me, how do I go about to pay my tax? Am I to charge VAT and payee?
I'm not sure I get that.
So this person is saying he's a sole photographer, and his business is not registered, but he has an admin who works with him, and he wants to know how he will go about registration for tax. And he's also asking if he will have to charge VAT and payee as a sole proprietor.
So as a sole proprietor, the question is whether you are registered for VAT. So now it depends on the type of business. The law has already defined what your revenue threshold will be, okay, for you to register for VAT. Now, I don't want to go too deep. I want to keep it simple. If you are registered for VAT, you should charge VAT on the services you are rendering. If you are not registered for VAT, check if you need to be registered for VAT and register for VAT. I think that answers the question. Otherwise, I'm going to go long explanation again and then.
Yeah, that's okay. Next question. As a registered media company whose business is registered as a business, not a limited liability company, and have about 6 staff and 2 interns, how do I go about my tax? Am I to charge VAT, payee, and what else? I think these questions are quite related.
Yes. So the first part of the VAT has been answered. The second part of the PAYE, yes, you are supposed to register as, even if you are a business name, you should register as for PAYE under the relevant tax authorities. Maybe Lagos State Internal Revenue, for example. So you'll be able to remit PAYE to the state on the income that your employees are earning, especially if they are earning above the, what's it called now, the minimum wage. So if they are earning below the minimum wage, you might not need to worry yourself. But if you are earning above the minimum wage, yes, you need to register and filing their taxes so that you can now claim that tax as a deductible expense. I mean, you can claim the entire salary you pay to them as a deductible expense against your business. Okay. And then finally, yeah, I think I've answered that question. So
yeah, you have. This is a very practical question now. The person is asking, can employer pension contribution and employee pension form tax relief for employee?
No. So it's only the employee pension contribution that form tax relief to the employee. Simply because the employer portion is a contribution towards your future old age, right? So it's only the one you are contributing is the only one that is deducted from your salary. You understand? So that is why the employer cannot be deductible for you.
Okay. At this point, I think like we said earlier, we'll just collate the remaining questions and see how we can solutions and responses to them. But before you go, one last question, or maybe we take two because of our time. We have barely about 6 minutes in this session to go. This person is saying, if I work and live in a different location from where my family resides, can I get relief on these two rents if I have evidence of payment of this rent?
That question is a bit tricky, but the law only provides for you to be able to earn even if you have 10 residents, the maximum of 500,000 naira from all the rent sources that you have. So I think it's a bit straightforward answer, but at the same time, sometimes there is a argument that you can put before the tax authorities, and they're able to say, oh, let us give consideration to this person. Okay. So yes, I would say you can only claim for one location, or if all the location you have are paying 10 million, you can claim a maximum of 500,000 on it.
Okay. Just some simple questions. I think you already touched on how and where can an individual obtain personal TIN.
Yeah, you can go on the website of the different state internal revenues and just generate it. It's very straightforward. The only document you need is your BVN and maybe your NIN. That's all.
Okay, 5 minutes more. This person is asking a very interesting question around the treatment of dividend. The person wants to know and get clarifications around the treatment for dividend, pre-tax reform and the post-tax reform. What exactly will be the treatment for dividend going on? And what was it before now?
So there is really not much difference. The only thing is that people have not been paying tax before. So before now, dividend has always been subject to withholding tax. And if you look at what we call franked investment income, most time dividend fall under that category. So before your dividend is paid to you, just that many people do not know, before your dividend is paid to you, most companies use registrars to manage their dividend. So before they pay the dividend to you as an individual, they've already deducted withholding tax on it. So, and in most times, they should even send you a certificate to show that you've deducted withholding tax on it. That way, you are more confident that withholding tax has been deducted. But because they did not even send you any certificate, so you don't know, and you will think that it has not been taxed. So most of the dividends in Nigeria have been taxed. So my simple answer will now be, on your tax returns, if you are not sure, you can ask from your whoever is responsible for providing dividend if it has been taxed. And on your tax return, you will now put it that this dividend has already been taxed. It will be considered to be an exempt income. You will not tax it again.
Thank you. Thank you very much.
So that is the pre and post.
Yeah, that's
there's
the
no much difference. Yeah.
Okay. I think we can take two more questions. So somebody wants to know and is asking for clarity around the difference between the application of presumptive tax on income and the use of best of judgment.
Okay, so presumptive, yeah, it's actually the same thing in simple words. It's the same thing. So the best of judgment is that based on your last year return, you paid 5 million as tax. This year, we believe that things should have improved for you a bit. So you pay 6 million. That's best of judgment. Presumptive tax is that based on you have not filed any tax return before, and you might have filed tax return before, but based on people in this industry, or you say you are selling provision, you are doing this, everybody in this industry, they are making around the range of 500,000, 600,000. So the tax that you will pay like 50,000 naira. So that is presumptive tax. And they tell you, okay, come and pay your tax. It's 50,000 naira. They will not bother to look at you. It's not like they look at your figures. They just tell you, come and pay 50,000 naira. But you now be the one to say, no, I did not make 50,000. No, I need to now work out how much I made to now pay the right tax. Otherwise, you have to pay that tax. So that's the difference.
Thank you very much. The very last question for this round. Does a landlord that has paid payee at his place of employment pay more income tax on his tenant's fee? Does this need any form of recalculation?
Yes. Yes, because the rental income is another income entirely. Don't forget that the PAYE is strictly your salary employment income.
Absolutely.
So you have to pay tax on any other income at all that you make aside from your salary income. And that is why you need to do that self-assessment. So you bring in your rental income, dividend income, investment income, and any kind of income that you make, bring them together and rework your tax. So whatever the tax is now on your self-assessment, minus the tax you have already paid on your employment, the difference is what you now pay to the government as additional tax.
Yeah. Thank you very much, Mr. Okonla, for that very engaging question and answer session. It was indeed insightful and we enjoyed every bit of it. I believe that all the participants who asked some of those questions have gotten clarity on the areas of concern they had before now. And for those we have not been able to address their questions, we will definitely respond to them and share them with you via WhatsApp or through the email addresses you registered with. At this point, I would now like to yield back to Mrs. Fasheru to take on introductions for the second speaker. Thank you very much.
Thank you so much, Tumishe. You did great. What do we say to Richie? Thank you so much, Richard. I mean, I learned so much. You went above and beyond. Thank you so much. And to my audience, a big thank you to you. Thank you for being super organized. I can't believe you sat for almost an hour, 30 minutes, just sitting pretty, learning, but above an hour, 30 minutes. So thank you so much for listening. The doing part is left to you. Richard has almost in a very, very mild way. He didn't threaten us, he just advised us so we know how to do better, and we trust that we'll do better. I'd also like to say a big thank you in the words of some of the participants. Thank you to Highland Business School for putting this together, our pastors, Pastor Nee, Pastor Joseph, and the executives. Thank you so much. It has been worth our time. Yes, let's switch on to a more interesting part. We're going into this tax income relief for corporate organizations, and bringing us another wonderful session will be Babatunde Babajide M, popularly called BBM. BBM is a driven professional with a first-class degree in accounting from the Federal University of Technology, Akure. He is a chartered accountant holding both AAT and ACA qualifications. BBM recently concluded his MSc in Finance at the prestigious University of Lagos. He is a senior associate, deals advisory, M&A tax at KPMG, where he has amassed extensive experience in merger and acquisition, tax restructuring, due diligence, and general tax advisory services, I beg your pardon. His previous roles at Martin Kutus Olorunba and Co., Chartered Accountants, Grant Thornton, and Pedabo have further enriched his expertise in audits, management, consulting, and taxation compliance, as well as advisory services. BBM is a multiple award-winning professional recognized for demystifying complex tax regulations on social media and inspiring young professionals. He is a result-oriented individual with a strong work ethic. He believes that the bottom is crowded and one must strive to reach the top. For him, weaknesses are not limitations, but opportunities for growth. I can't wait to listen to you. He is committed to continuous learning and personal development. As a financial planner and financial market analyst, BBM possesses a deep understanding of financial markets and personal finance. His passion for finance drives him to share his insights on platforms like LinkedIn and Twitter, where he is dedicated to helping others achieve their financial goals and make informed investment decision. Like I said earlier, he is currently a senior associate, deals advisory M&A tax, KPMG West Africa. Ladies and gentlemen, with your hands together in the chat room, your e-hands, shall we make welcome BBM Babajide M as he takes us through the impact of the Nigerian tax reform on corporate organizations. The next voice we will hear will be that of BBM. Welcome, BBM. It's great to have you with us.
Yeah, good afternoon, everyone.
Afternoon, BBM. Welcome.
Please confirm you can hear and you can see me. I'm trying to run my camera.
We can hear you loud and clear. We can see you as well.
All right. Thank you so much. And thanks to the organizers, thanks to Highland Business School. Thanks for the opportunity for bringing me on board. I really appreciate. And this is actually a great thing, bringing fiscal knowledge to people and to let them to create more awareness regarding how the new tax reform affects them, which is one of the key aim of the presidential committee as well, to ensure that everyone is well informed about the new tax provisions and everyone stay ahead of 2026. All right, so I will be sharing my screen right away. I'll be making the requests. Okay. All right, please let me know whenever you can see my screen so I can go ahead. Can you see my screen?
Yes, we can.
please. We can
All
see.
right.
Please go on.
All right, thank you. And I will be picking it up from where Mr. Richard dropped it. So he has touched base on the part of the Nigerian Tax Act that affects individuals and business names, companies that are registered as business name. Okay, and I will be, because of that, I'll be speaking on the corporate side. So if you are a business owner, or I mean, I believe most of us work with, or many of us work with corporate organizations. So you may want to, stay close here and see how the provisions of the NTA affect you. And I'll be speaking mostly on the key provisions. I can't cover all due to time, so I will try as much as possible to cover as much as I can. And maybe as a way of disclaimer as well, things that I'll be sharing, they are not to be, they are for knowledge sharing purposes, and should not be quoted as a form of an advisory or whatsoever. The aim is to educate, is to ensure that we stay informed, and we know that depending on your situation or on your scenarios, cases may differ. So if you need professional advice, I would suggest that you go ahead to a professional, to a tax consultant, who can properly look at how this provision affects you, affect your businesses. So the aim of this conversation is just to stay informed, just to guide you, to give you an idea of what is coming. So, and it is not an advice, and it is not an advisory talk. All right, so as Richard has said, the NTA or the reform is divided into four. We have the Nigerian Tax Act, we have the Administrative Act, the Revenue Establishment Act, and the Joint Revenue Board. They all have their objective, but the overall objective, is to basically simplify the tax system in Nigeria and unifying everything into a single document. Like before, we have several documents. We have the CIT, we have the PIT, we have the VAT, we have the stamp duty, we have the CGT, we have so many of them. So the aim of the NT is to bring everything together and also reduce the number of taxes that we have. Like Nigeria have so many number of taxes. I mean, currently, based on the current provision, I think we have nothing less than 60 taxes. So the aim of the NTA, or the aim of the reform, sorry, I'll be using these words interchangeably, is to simplify them and have them in a single place and scrap a lot of all of these multiple taxes that we have. So going straight into it, into the key provisions. So the Nigerian Tax Act defines the Nigerian Tax Administrative Act, and also the Act as well. The Nigerian Tax Act also defines what small companies are. And the NTA, that's the Administrative Act, defines small companies as companies with turnover not exceeding 100 million, and total fixed assets below 250 million. Although this excludes professional service firm like where I work, KPMG, or you're a law firm, you register as a professional service firm. So this doesn't cover you. So the NCAA, the Administrative Act, defines a small company as companies who falls into this category. However, there's a flip side to it. Companies that fall within this category are exempted from income tax. So meaning that you'll be assessed to income tax at 0%. In essence, you are not paying. However, this doesn't mean that you will not file. I heard Richard trying to make some clarification regarding that, concerning individual tax. The fact that you are not required to pay doesn't mean that you are not required to file. There is a filing obligation and there is a paying obligation. So don't mix those two up. So as I was saying, there seems to be misalignment somewhere in the Reform Act, because the NTAA defines the threshold to be 100 million and 250 million. However, the NTA defines it as 50 million or less with same fixed asset base. So there seems to be a misalignment, and the question remains, what is the threshold for exempting small businesses for company income tax in Nigeria? Regarding this, I don't have the answer to it. So we expect the Reform Committee or the Minister of Finance or the FRS to provide clarification on this. Though there is a document that was published by the Reform Committee days ago, highlighting 50 exemptions, and it was noted in that document that the threshold for small businesses is 100 million. However, the document is not the law, so it cannot be relied upon. So as of today, the clash still remains, and we are looking forward to clarification from the relevant bodies. Okay. And companies that do not qualify as small companies will be liable to income tax at 30%. That's pretty straightforward. Unlike the way we have it currently, we have 0% for small, 20% for medium, and 30% for large. So now we only have 0 and 30%, depending on where you belong to. Okay. The NTA also, expands the definition of a Nigerian company. So it expands it beyond an entity that is registered in Nigeria, because based on the current provision, Nigerian companies are defined as entities that are registered in Nigeria. However, the NTA adds that foreign incorporated entities that are effectively managed or controlled within Nigeria will now be subject to tax in Nigeria on their global income. So all these foreign entities will now be seen as a Nigerian company, and they will be subject to tax on their foreign income in Nigeria. So regardless of the fact that you are not incorporated in Nigeria, if it can be deemed and proven that a foreign entity can be managed and controlled within Nigeria, such an entity will be seen as a Nigerian entity, therefore subject to income tax in Nigeria. Also, we have a provision regarding lottery businesses. This covers companies that are into gaming, into gambling, into wagering, video poker, and so on and so forth. So there's now provision for them. It's now being stated clearly in the provision that companies in these industries are now required to pay and file for tax in Nigeria. All right, so we have something that we call the minimum effective tax rate as well. This seems to be something entirely new from the NTA, because Nigeria currently do have something regarding this. So what does the minimum effective tax rate, what does it say? It's basically saying that companies with annual turnover of 50 billion naira or more, or a company that is a member of a multinational entity group with global turnover of 750 million pounds, whose effective tax rate falls below 15%, will be required to pay a top-up in Nigeria. Okay, so I'll try as much as possible to simplify this. So Section 57 of the NTAs sort of seeks alignment with what we call the OECD Pillar 2 framework. It's just this has to do with international taxation, whereby like there is a global or minimum effective tax rate for multinational companies that they are expected to pay a minimum of 15% of tax in every jurisdiction that they belongs to. So what the NTA is now trying to do is that for a multinational that is located in Nigeria, whose effective tax rates in foreign jurisdiction is lower than 15%, you will be required to pay a top-up year in Nigeria. So the aim is that you ensure that at overseas, if your effective tax rate is lower than 15%, you'll be required to pay a top-up year in Nigeria. So in essence, try as much as possible to ensure that you pay up onto 15% over there, because once you hit 15% abroad, you won't be required to pay a top-up here in Nigeria. And I think the direction of the government is the fact that many countries of the world, they have started to implement this effective tax rate. So the government is of the opinion they are of the opinion that if you are not paying this top-up here in Nigeria, you will eventually be asked to pay it somewhere else. So why not collect it in Nigeria? So that is the direction, that is the aim of the government. I'm not saying if it is right or if it is wrong. I'm just trying to tell you what they are thinking is and what they are trying to achieve. Okay, so we also have something similar to the CFC rule, that's controlled foreign entities. This was introduced in the NTA as well. We don't have any provision regarding this currently based on the current legislation. And what the CFC rule says is that tax profits of foreign subsidiaries in the hands of, it's introduced to tax profits of foreign subsidiaries in the hands of Nigerian parent company. Let me give you a good example. So let's say we have Richard Holdings in Nigeria that has so many, or let's say Highland Holdings in Nigeria that has investment, let's say banking, real estate, and all of that. And Highland Holdings happens to have companies in like Kenya, South Africa, UK, and all of that. So what the CFC rule is now saying is that for Highland Holdings in Nigeria, any dividend that is deemed to be collected by Highland Holdings in Nigeria, but is not being paid to Highland Holdings in Nigeria, will be deemed to be received by Highland Holdings and be subject to tax in Nigeria accordingly. Just for the purpose of clarity, this doesn't mean that Highland Holdings has actually received this dividend in Nigeria. No, it talks about deemed distribution, any deemed dividend that you ought to have received, either you've received it or not. But if you ought to have received this dividend, and so if you ought to have received this dividend, you'll be required to pay tax on this dividend in Nigeria accordingly. So that is the provision of the CFC rule in this regard. Okay, we also have foreign exchange restrictions. So this foreign exchange restriction, we also don't have it in the current framework as well. It's just in a way to ensure that it's just to discourage the participation of the black markets or the informal markets. So it's just to ensure that companies or corporate organizations they go to the appropriate channel, such as the CBN or the banks, to get foreign exchange, to get forex. And as a result, if there is any entities that goes to the black market or the unofficial market in order to source for FX, they will not be required and they will not be allowed to claim the excess of all these exchange of the exchange rate margin in their company income tax computation. What am I saying in essence? Let's say the CBN rate is 1,500 naira per dollar, but you as a company, you went to the black market to get your own rate at 1,600 naira. The extent to which you'll be able to claim expenses relating to that FX in your books will be restricted to 1,500 naira. Meaning that the difference between 1,500 naira and 1,600 naira, that is 100 naira per dollar, you will not be able to claim it for tax purpose. I hope I'm able to explain that better. So it's sort of trying to discourage parallel markets, that any excess above the official market that you source for from the parallel market will not be allowed for deductions in the will not be allowed for deductions for tax purposes. Okay, and moving to the next slide. So export processing zone and our free trade zone. So we have regulations that also affect our free trade zone. I know some of us may be familiar with free trade zones. These are jurisdictions in Nigeria. They are physically located in Nigeria, but they are not seen as a territory that belongs to Nigerian government. How can I explain this? I think the perfect example is see them as an embassy. For instance, US Embassy's office in Nigeria cannot be seen as part of Nigerian territory because Nigerian laws does not apply to them there. A Nigerian police officer cannot go to UK embassy, US embassy, and just say, "Oh, I want to arrest somebody." No, that jurisdiction does not belong to the Nigerian government. It is not called customs territory. So that's the term that we use. So same thing with free trade zones. So free trade zones in Nigeria are being regulated by a separate rule. They are not being regulated by company income tax, VAT Act, and all of that. So the NTA introduced quite a number of changes because the FTZ were being established for specific reasons. And some of the reasons for establishing this free trade zone is, to encourage investments into the country, to exempt companies from taxes, and to boost local production as well. So these are some of the aims why the government introduced free trade zones. However, the NTA is now saying that any entity within the free trade zones that makes supplies of over 25% of its sales into Nigeria, into the custom territories in Nigeria, will be subject to income tax in Nigeria. Meaning that the government is trying to say, if you are a FTZ, the reason why you've been established is to make production and to export, make sales outside. We don't want you to compete with local companies here in Nigeria. Okay, and as a result, if you make any sales or your turnover, your turnover, or you could generate 25% of your turnover from the custom territories in Nigeria, you'll be subject to income tax in Nigeria accordingly. And interestingly, from 1st January 2028, regardless of the threshold, if you make a single sale into the custom territory in Nigeria, you'll be subject to tax in Nigeria. So that is one interesting thing that the NTA has introduced. And currently, entities in the free trade zones, they are running up and down to see how this can be reversed, because this is going to affect them a lot. Because one of the entities in this free trade zone is the Dangote refinery, and the Dangote refinery, one of the aims is that it should help in boosting local supply, making sales of petroleum or refined products into Nigeria. So saying this is a sum of discouragement into investing into such. We have quite a number of our free trade zones in Nigeria actually, but like I think 50 of them. We have the Eco Atlantic. We have quite a number of them. All right. Reclassification of VAT exempt goods and services to zero rated. So the NT also reclassifies some goods from zero rated from VAT exempt to zero rated. And the importance of this is that companies will now be able to claim to have more input VAT in order to offset their output VAT, in essence reducing the net VAT. And also companies can now claim input VAT on fixed assets. Currently, you can't do that. Okay, we also have EDI, that's economic development incentives, which is meant to replace the pioneer status incentives. So the economic development incentive is to grant tax holidays and incentives to some priority sectors in Nigeria. And we have a list of all of these priority sectors, I think, including agricultural businesses. Okay, stamp duty on insurance policy and other kind at ad valorem rate. The NTA also specifies both fixed and ad valorem rates for the respective dutiable instruments listed in the Act to be subject to stamp duties on insurance policy. However, the absence of a clear description of the transaction in which the stamp duty rate would be applied for insurance policy on other kind would result in varying interpretation. So what am I trying to say here? The NTA specifically states the rates for stamp duty on insurance policy of any other kind. However, it wasn't specified for some kind of other forms of insurance policy and all of that. Also, taxation of holding companies in Nigeria. There's I think I've touched base on this earlier on regarding taxation of holding company, where I was trying to use an example of Highland Holdco in Nigeria and all of that. So I don't want to dwell too much on that. So there's also stamp duty relief for business reorganization. If you are sort of like you have so many entities within the group ABC, and trying to transfer assets or transfer business from one entity to the other, there's a relief of stamp duty on such arrangements. Also, introduction of development levy. Currently, we have the NASENI, the TET, the NITDA, the police transfer, and all of that at several rates. So the NTA says, you know what, scrap all of these taxes. Now we now have a single development levy of 4% of accessible profit. Okay, also the e-invoicing as well too. So the e-invoicing is a system that the FRS or the Nigerian Revenue Service, they've tried to put into place to ensure that to facilitate and aid tax reporting in Nigeria. And the authority intends to start with large taxpayers with a revenue of 5 billion naira and above. So, and the aim of the e-invoicing is to ensure that every of your transaction goes through this system in real time. So it is a real-time system whereby it gives the FRS the authority, the opportunity to see your real-time transaction, because you as a business owner, you are now required to process your invoices using this platform. Although this system seems to have some criticism that it gives the tax authority to have access to your information anyhow. Then where is the right to self-assessment system? Is it that the tax authority no longer trusts the taxpayers anymore and all of this? But mine is to tell you what the aim of this system is and what the government is trying to do. Okay, and there is a penalty for non-compliance with with the FRS e-invoicing. And like I said earlier, the initiative is in its pilot testing phase, with implementation scheduled for November 2025. So they've been shifting it over time. Before it was middle of the month, then they shifted it to maybe August, October. Now they said November. So I think they are still working on it. And I'm very certain by 1st of January, things will fully be in place for large companies and non-resident entities as well. Okay, so there's also concession available for business restructuring, like an exemption from VAT, an exemption from income tax, and transfer of tax assets. You cannot transfer your tax assets if you are carrying out any form of business restructuring, such as merger and acquisition. So the NTA makes clear provision for such that if you are carrying out any form of business restructuring, company B within the same group, you want to transfer an asset, or let's say there's a form of merger, the way we have Access Diamond and all of that. So such business transaction is not exempted from VAT, because there will be transfer of assets during all of this process. And also, exemption from VAT as well too. Okay, business exemption. The NTA exempt numbers of businesses. I think I've touched based on this, like educational institution, agri-businesses. Richard was saying something regarding this the other time, that educational institutions being exempted from taxes in Nigeria, in as much as you are not registered as a company, you are not registered for the purpose of making profits in Nigeria. And generally, agri-businesses are exempted for the first 5 years of commencement of business. This is in an effort, to encourage agri-business in Nigeria. VAT refund. The NTA clearly make provision that a taxable person, may apply for VAT refund of unused excess VAT. This is in a situation whereby like your input VAT is higher than your output VAT. You can claim for a refund. However, you are required to apply for a refund within 12 months of the relevant transaction. So meaning you have to be tracking this. Any month in which if you notice that your excess is piling up and you need cash to survive as a business, so why not go apply for a refund instead of waiting waiting for your excess VAT to be used to offset your future VAT liability. You can claim for a refund, and the tax authority must process the refund or apply it against any outstanding tax within 30 days of receiving a valid request. This is actually interesting because based on the current provision, I have even heard people that have spent 30 years that have 30 years experience in Nigerian tax. They will tell you that applying for a refund in Nigeria is as good as impossible. And I think I've listened to one of Taiwo Itele's video when he was saying same thing, that in his experience so far, in his over 30 years of experience, he has only been able to he has only been able to get a refund for only about, I think, 3 times or so, if I'm not mistaken, and all of that. So that's to tell you how difficult it is to get a refund under the current tax administration. But the NTA is now introducing a more strict provision that the tax authority is meant to, approve your refund within 30 days. All right. Input VAT. The NTA broadens the scope of allowable input VAT to include input VAT incurred on services and fixed assets. I think I already mentioned that of fixed assets. So, based on the current provision, companies that provide services like professional services, they are not actually they usually don't have any form of input VAT. But given the fact that the scope of input VAT has been expanded to to include fixed assets, so they can sort of use this to offset their output VAT and reduce the net VAT that will be paid. All right. Okay, we have the EDT, which is okay, the pioneer status incentives. I've touched base on this. The economic development tax incentives for priority sectors. Sorry, I put this here again. I already spoke about it. Business restructuring for CGT. So for capital gains purposes. Oh, sorry, there was a mistake here. This is not meant to be saved as business restructuring. So these basically for capital gains tax. That's CGT. That's CGT. So the NTA currently restructure the capital gains tax in Nigeria based on the current provision. Capital gains tax rate is at 10%. However, the NTA has now reclassified CGT to be taxed under personal income tax, which Richard has earlier covered, and 30% for companies, which I'm speaking to now. So meaning that as a corporate entity, you will now be subject to capital gains tax at 30%, not at 10% anymore. That is what I'm trying to say in summary. But for individuals, you'll be taxed, any gains on disposal of your assets will be taxed under your personal income tax, as explained by Richard. So I'm trying to say this so that we don't mix things up. Do you understand? So, and there's a threshold for the imposition of CGT of shares, on disposal of shares rather. And based on the current provision, the CGT Act provides that if you make any disposal of up to 100, that is less than 100 million in any, if you make a disposal of up to 100 million naira in any 12 consecutive months, and in any 12 consecutive months, gains on such disposal is exempted from VAT. However, the NTA has increased this threshold to 150 million. Also within 12 consecutive months. However, it's added that where the gains does not exceed 10 million, such proceeds will be exempted from CGT. And also, where the proceeds are reinvested in a Nigerian company, tax will not apply on such gain as well. Okay. CGT on indirect transfer of ownership. So there is a new provision in the CGT Act as well. So that introduced CGT on indirect transfer of shares. So this is a bit tricky. So let me create a scenario which I usually use. Let's say we have a Nigerian company called Highland Business School in Nigeria, and we have an entity in UK called Richard Limited in the UK, and we have another entity, let's say for instance in the US, Babajide Incorporation in the US. These three entities, they belong to same group. All right. So let's now say Richard UK is the shareholder of Highland Business School in Nigeria, and Babajide Incorporation in the US is the owner of Richard UK. Okay, so let's now say Babajide Incorporation in the US is transferring its shares in Richard UK to another entity, let's say in Mauritius. Okay, so that kind of transfer will be subject to CGT in Nigeria because it is deemed to be an indirect transfer of Nigerian assets. I don't know if I explained this better, but what the NTA is trying to say is that any indirect transfer, because based on the current provision, it only provides for direct transfer of assets. I have this car and I'm disposing it off. That kind of transfer is subject to CGT, straightforward. So that's like a direct transfer. So the indirect transfer now comes whereby in a situation whereby it is not a clear direct transfer or direct disposal of assets. It is indirect. Such kind of transfer will be subject to CGT in Nigeria as well. And there is actually a condition regarding this, so it's not applicable to all. And the two conditions are where over 50% of the share value of the offshore company within 365 days before the sale is derived from Nigerian assets, and the sale results in a change in ownership or group structure of the Nigerian entity. Like I said, using the scenario that I gave, Richard UK owns Highland Business School in Nigeria, and by owning it, of course, holds more than 50% shares. So Babajide US disposing its shares in Richard UK to another entity in Mauritius will obviously change the ownership and the ownership structure of the entire group, or the ownership structure of Highland Business School in Nigeria. As a result, this transaction will trigger CGT in Nigeria. We currently don't have this in the current provision. Input VAT, the NTR adjusts the rates applicable. Oh, sorry, there was a mistake. I forgot to change the headings here. This is not meant to be input VAT. This is meant to be stamp duties on lease. So the NTA adjusts the rates applicable to lease for stamping of documents. So that's 0.78% for lease within term of 0 to 7 years, and we have 3% for lease exceeding 7%. Also, the NTA exempt lease with an annual value less than 10 million. So if you have any lease agreement, I think this is mostly for the real estate guys or people that just lease properties and all of that. So if the lease amount is less than 10 million naira, you're exempted from stamp duty. All right. I'm trying to move very fast. Harmonization of I've touched base on harmonization of companies income tax and CGT tax rates. And the NTA omits the income tax exemption for entities in the oil and gas and free trade zone. So I think I don't want to dwell into this. So when I was explaining free trade zones, so we also have free trade zones for oil and gas as well. So we call them oil and gas free trade zones. So similar thing. So the NTA deletes the provision that excludes oil and gas free trade zones from tax in Nigeria. So meaning that oil and gas companies in the free trade zones will now be liable to income tax in Nigeria if they trade, if they carry out transaction in the customs territory. Okay. Suspension and commencement of VAT on certain products. So the NTA clearly provide that VAT shall not be collected on petroleum products, LNG, CNG, hydrocarbons, and all of that. And consequently, under the NTA and pending the lifting of the suspension of these items, will not be liable to VAT in Nigeria. Okay, so and the inclusion of deep shore and offshore. This is more for guys in the oil and gas. The guys in the oil and gas. So the NTA omitted the exemption of deep shore operations from hydrocarbon tax. In essence, guys that are in deep shore and in deep shore operation, they will not be subject to hydrocarbon tax. Okay. Briefly, let me touch base on digital assets as well. So there's a clear provision for the disposal of digital assets in the NTA under the capital gains tax. So as companies that is into virtual assets, trading or provides virtual asset services, you now be subject to tax in Nigeria under as company as capital gains tax. And the NTA sort of define digital assets to include crypto, utility token, NFT, and other forms of digital assets. So in essence, crypto guys, or if you work with an organization that is into cryptocurrency, so any asset, any disposal of such assets will now be subject to income tax in Nigeria. For a company, that will be 30%, and for individual, that will be 10%. So that still remains. Okay. And okay. So touching base on virtual asset service provider as well too. So the NTA makes provisions for virtual asset service provider, though this seems to be like an overlapping provision, as the responsible authority to make provision for virtual asset service provider is actually SEC, which they've done that, which justice have been done to in Investment and Securities Act of 2015. But surprisingly, we still have this in the NTA as well. So it's just trying to providing clarification and the fact that entities that carry out virtual assets in Nigeria, they are now required, to register for income tax in Nigeria and comply accordingly. And we have the likes of Binance, Luno, Coinbase, and all of that. All right, so let's look at the Nigeria single window project as well too. So this is a framework that was developed by, let me say, it's a combination of, because we have something similar to this at the moment under the Nigerian Customs Service, whereby there is a single window for importers and exporters. So in summary, it's just the government's trying to uniform it and make sure that the NRS, that's the revenue, the new revenue body replacing FRS, will now be utilizing the single window platform as well, in line with the customs as well too. So, and the aim is to simplify trade procedures for importers and exporters in the country. So that is just the summary. I mean, a very high level of it, and of course, it impacts everyone. People operating in the ports, cross-border traders, etc., etc. So moving to the end, what is the next step for business? What is the next step for business or for company owners? It will be important you carry out impact assessments, conduct a detailed impact assessment to look at how these provisions, look at how they affect your business. This is a very short conversation, and there's no way I could have touched base on how it relates to each industry. Okay, so it will be important. Reach out to professionals to carry out impact assessments for your business. Ask them, provide your financials and other information that you have. Ask them to look at how can this NTA, how does it affect your business, so you can stay ahead, so that you can look at specific loopholes that will be applicable to you. All right. Then risk management, roll out and develop a comprehensive compliance strategy on how you can handle many of these orders, and carry out capacity buildings too, like engaging stakeholders and conduct trainings, which is one of what we're having at the moment. Okay, so this will bring me to the end of the presentation. I think I was able to keep to my time. I was actually rushing. And at this point, I'd like to welcome questions. Thank you so much. Hello? Is anybody here? Hello? Sorry, I can't hear anybody. Am I the only one? Oh, you can hear me. Okay, let me rejoin. Let me rejoin. I can't hear anything from my end.
I'm so sorry. Don't rejoin. BBM, don't rejoin. I'm so sorry. I was muted.
Hear you now.
Yeah,
Okay,
we
okay.
can hear you. Can you hear me, BBM?
Yeah, I can hear you now. I can hear you.
I was so sorry. I just needed the host to unmute my microphone. We could hear you loud and clear. Thank you for the excellent job. Thank you so much. Another perspective, and we learned so much. So we go right into questions and answers now. There are a few questions that we will take, so we can you can do justice to it. So I'll start with the ones that have been dropped in the chat room before I get the compilation of others. So there's someone who wants to know, say he started operating his logistics limited liability business for over 2 years, and he has never paid any form of tax or kept any book. Does it mean from 2026, they will calculate all previous years as well? What advice do you have for him? BBM, did you get that question?
Yeah. I think I do. So essentially, this particular question, it's not even about the provision of the NTA. NTA or no NTA, in as much as you are a registered company, you are registered as a limited liability company. Any day, anytime, the FIRS may come for you. So let's say there's no even NTA, you need to get your house into order, clean up the mess, get a consultant, let them prepare your financial statements for you, and let them prepare your tax computation for you, and go and file before they will come. So what I would say is get your house in order. So go and file now before they come for you. Of course, there will be penalties, but the fact that you are reporting yourself, maybe they might have mercy on you, and try to waive some of the penalties for you. But trust me, one day they will come for you. So please do that as soon as possible. I hope I'm able to answer
Thank you
that.
so much. Yes, you were able to answer that. One day, before they come for you, clean your house. Thank you so much. There's another question here. It says, what if a company's turnover is 50 million? I think Richard mentioned something around this, but please help us lay to rest. If a company's turnover is 50 million and the total fixed assets exceeds 250 million, does such a company qualify as a small company?
Okay, just a minute. Okay, so the provision of the law in the NTA is and, meaning that the two conditions has to be met. So if one condition is met, that means you still don't fall into it. I don't know if you get what I'm saying. because it says that exceeding 100 million and total fixed assets below 250 million. So it is the two has to be met jointly. So in as much as you don't miss the two conditions jointly, I think you are safe.
Okay. Okay. Thank you so much. I'm sure the participants got that. I'm trying to see the questions. Okay, so someone wants you to kindly expatiate on WHT aspect for corporate companies buying from unregistered vendors.
WHT, I was thinking maybe it's going to be on VAT because there was a provision. I mean, and I saw some trends on X whereby people are saying that don't do business with anybody that doesn't have a VAT registration number and all of that. Don't do any business with them. So there is, I think that, okay, it wasn't covered in my slide. I think the question is on VAT, not withholding, because the NTA did not basically change anything regarding the withholding tax regulation 2024. So it still remains. So essentially, yeah, the provision is regarding the fact that for any expense, so I'm a company, so and I'm doing business with you. For any expense of which VAT was not charged and paid on, I will not be able to claim such expense as an allowable income for my company income tax purposes. So what is this trying to say? Make sure that whosoever person you are doing business with, they charge VAT and they are registered for VAT and they are remitting your VAT. However, there's an interesting side to it. If they failed from their end, you can also do it on your own. You can self-account on your own. So the system makes provision for that flexibility. So that is it. So if you are doing business with an unregistered vendor, you can also remit the VAT on your own. You don't need to wait for the other person to do it. If you know this person is not going to do it, go and do it by yourself. So that is my advice. And by unregistered vendor, we may have to be careful because some transactions may also be classified as over the counter. Imagine maybe I'm driving my company's car, then my tire went down. Then I enter maybe Ladipo or I entered one roadside vulcanizer, help me to put something in my tire. I'm helping to fix it. Then you say, "Oh, guy, your money is 5,000 naira." Will I say, "Oh yeah, I'll deduct maybe withholding tax or VAT"? So of course you have to. There will be over the counter transactions, but for some, for some proper transactions, whereby like there are proper documentation for, just make sure that the person you are dealing with, they have their compliance documents ready and they are compliant generally. And if they are not, you can do it by yourself. So that's my response to that.
Thank you so much, BBM. Emphasis on unregistered vendors sounds like a risk. So there's a follow-up question on that WHT that someone is asking if you can explain the concept of withholding VAT. Okay, can you just to quickly be done with that and then we'll move to something else?
Okay, I should just explain the concept of withholding VAT.
Yes.
Okay,
yes,
so
please.
again, this is not specific to the NTA, so because we have it currently. So the concept of withholding VAT is that starting from the government's perspective, because anything that is in the law, I always like to link it to the thought behind it and what the government is trying to achieve or do. Okay, so the concept is that years ago, government came up with a list and appointed some entities that, we understand that suppliers are the one meant to charge VAT in their invoices. However, the government is of the opinion that it is easier for the government to appoint some agents to help them collect VAT instead of the supplier doing such. So let's give for instance, one of the entities that are required to withhold VAT are banks, and I think oil and gas as well too. So let's say you are providing service to a bank. Let's say maybe professional service, or you are supplying banks with some sort of like, you are making some sort of like supplies, and you're meant to input in your invoice that, okay, I've provided this service to you of 20 million naira. Then you pay VAT at 7.5. Bank will not pay you that 7.5 because the law has appointed them to withhold the VAT. So it will now be the bank that will now go and remit it to the government.
Okay.
Do you understand? So the normal thing is that you as the supplier, you are meant to charge that VAT, collect it and remit it to the government. But the government is now saying that, you know what, don't worry, let the big guys do it for us. Because to me, it's easy for the government to chase all these big companies than to be chasing all these small suppliers. So I think that is the rationale. So it's just to, make the entire process seamless and easy for the government so that they can easily go and chase the big guys that, oh yeah, where's the withholding VAT that you've helped us to, to collect, and you account for it. So that's the layman concept behind withholding VAT.
There's another follow-up question, but we'll come back to it. I saw a question when Richard was speaking earlier, and it speaks to your topic, so I'd like for you to respond to it. Since a gospel singer was issued a tax letter from LIRS, but the person doesn't have any income received or salary received, the only income the person received was honorarium. Is the person liable? To file the direct assessment annual income from LIRS?
Okay, so
BBM, did you get that question? It's
yeah,
also on
I
the
do.
screen.
I do. Okay, gospel singer. Okay, so to begin with, it depends, because sometimes we see gospel singers as individuals. Many of them, they operate through record labels or whatever thing that are usually a company. So it may depend. So let's see this the gospel singer as a person, as an individual. Let's say, Babajide Ministerial. So I perform everywhere and all of that. So with that, and I receive honorarium and all of that. So I am required to pay tax on such, because it is part of my income, and that is what I do. Because people that do vocation, professionals, and all of that, they're also required to file their income tax. So as a gospel singer, that is your vocation. That is what you do. That is your source of income. Do you understand? And it forms part of your income at the end of the year and all of that. So I don't think the LIS will be wrong to have issued the person an assessment. Do you understand? To pay income tax, to pay his own fair share. As Richard said, and I think Richard sort of touched based on it, even pastors, they are required to pay payee as well too. They also pay their fair share to the government. While tithes may not be subject to tax, but salaries of maybe choristers or of pastors or reverend and all of that is subject to personal income tax as well too. Hello.
Thank you. Yeah, BBM, thank you so much.
All right.
Aligns with what Richard had said earlier. Yeah, so there's
Yeah.
a question on digitalization I'd like for you to take.
Okay.
Says, I'm quite aware that FIRS is undergoing digitalization and linking its systems with that of banks for direct receipt of tax for digital transactions. Now, question one, to what extent are these information used for companies' tax liabilities? Number two, for private limited companies that have not been paying tax and have modeled up personal dealings with their corporate dealings, how can they navigate the tax regime? Number three, what exact tax provisions can we use to convince some of our clients who are a bit stubborn? Do you want me to take them again? Should I take them one after the other?
So just pick the first one, then let me speak to it briefly, then second one.
Okay.
So that's why I don't mix things up.
Okay.
So what's the first one?
All right. So to what extent are these information used for company tax liabilities? That's talking about the digitalization and linking of systems with banks for direct receipt of tax.
Yes. Okay. So I would say to a very large extent, because even under the current provisions, the FIRS have the right to write to a bank of the taxpayer to provide for some document, or maybe like their financials and all of it. So it's something that FIRS they've done in the past, And I believe that going forward, they will still do more of it. And the fact that they are now moving to a more digitalized system, which gives them access or some sort of like partnership with banks and all of that, it will give them access to unlimited data regarding you. And with such a thing, it will be difficult to run away from the tax authority. So of course, I think it's clear. With such in place, it will be difficult to hide anything. FIS will be able to have access to your direct data, and they can
Wow.
come after you at any point in time. Although I think there's still this is still being criticized because, like I said earlier, the system is meant to be a self-assessment system. So if you are tracking my transaction, I said it when I was talking about the e-invoicing. Why do you want to be seeing invoices on real time? That means you don't trust me, which defeats the purpose of self-assessment system. Self-assessment system should be that I've made this income, let me come and file. Then if you have any objection, object to it based on your own
Absolutely.
intelligence as well. Not that you should be tracking me day in, day out and see all of my transactions. So this is still being objected, especially by the legal guys from the legal side of tax. They feel
Okay.
this is not appropriate.
Okay. Thank you so much. Like encroaching into one's privacy. So I need you to
Yeah.
speak to the second part of the question. So for
Okay.
private limited companies that have not been paying tax and have modeled up, I think you touched on it, that modeled up personal dealings with corporate dealings, how can they be helped to navigate this new tax reform?
Number one, get a tax consultant. There's no way about it. I mean, if someone is sick and you need medical attention, what do? You go to the clinic. So the tax consultant is your doctor. Go to them, open up to them,
Yes.
let them know how messy your financials are, so they will see what they can do. Like I said, you will have a lot of penalties, interest and penalties that will have piled up. But FRS, you can negotiate with the FRS, because imagine they ask you to pay penalty or an interest that is like even more than the level of the revenue you've made this year alone. I mean, what would be the joy of the government if you're out of business? So why am I saying this? They are human beings. You can negotiate. The tax controller may decide to waive some of the penalties for you. I mean, of course, I know that ignorance is not an excuse, but professionals that are on the call, they can agree with me that something can always be done. Something can always be done. Then going forward, please and please don't do personal transaction with your corporate account. And I think Richard also said something regarding that.
Yeah.
Try to always split it, because they will have us now. They will be having access to your financials. Imagine maybe your brother from UK wants to send you money to help him buy a car. You now say, oh, because it's 10 million naira and my personal account cannot take more than 5 million naira. Oh yeah, let me give you my big corporate account. Send it to my corporate account. If FIS come and they see that financials, 10 million naira, they will pick it as part of your income, and it will be difficult for you to defend it. So learn to separate your business from your personal life. It will really, really help you a long way. So that's what I'll say regarding that.
Thank you so much. That was very put together, very well put together. Now, I heard that if a company buys from vendors without a TIN to pay WHT2, the company will be fined 5 million naira. The person wants to know how true this is. Is there a penalty for companies that buy from vendors who do not have TIN? And if there's a penalty, is it a fine of 5 million naira?
I can't recall straightforward like this, but I don't think there's a provision like that. But I can't recall, so I can't give an express answer to that. But where there is such, then that means there is. That's the provision of the law. So meaning that, but I don't think there is, because I'm not sure. I'm not sure if there, maybe something I can check and get back to. But top of my head, I can't think. I don't think there's such provision. Like I said, linking it to what I saw online regarding VAT as well too. That if the company doesn't have VAT, this thing, don't do business with them and all of that. I don't think there's such provision. The worst thing that the tax authority can do is that they may not recognize such a thing, and you may not be able to claim, because, for instance, One interesting about withholding tax is this. If you deduct withholding tax from the money you are meant to pay me, that withholding tax is not a tax. It is an advance payment of company income tax. So if you do not remit withholding tax on my head, that means you are surcharging me. In the future, when I want to pay my CIT, I will not be able to use it as a credit. So I don't think there's a provision like that. I mean, I'm not saying expressly, but from the top of my head, I don't think there's a provision like that, because if anybody did not remit your withholding tax, they're actually surcharging you, because in the future, it will reduce your withholding tax credits. And at the end of the whole show, you will be affected. So as a business owner, if anybody deducts withholding tax on you, chase them aggressively. Okay? Provide evidence that you've remitted this withholding tax on me, so you can be able to use it to reduce your CIT at the end of the financial year. So that's my
Thank
response.
you. Thank you so much, BPM. I see other people attending to that same question. So I think somebody dropped a particular link for us to check N90 subsection and confirm what you have said. So we are on the right side of the law. Okay, there's a question around education. We've talked about schools. We've talked about churches. Now we're going to schools. So it says, if it is true that schools and educational materials are VAT exempted in the NTA, however, what happens is that schools buy a vertible product. How do they claim impute VAT, as there will be no output VAT to net off same? Or are schools not supposed to pay any VAT at all?
Okay, so to begin with, under the NTA, they are now 0 rated, not exempt. So, but based on the current provision, they are VAT exempt. So under the NTA, they will now be 0 rated. So that's part of the classification that I talked about. So meaning that going forward, their what's it called? Sorry, can you project the question? I want to make sure I'm not mixing it. Can you project the question?
You want me to take the question again?
Or if you can take it again,
Okay, I can take it again. It says, if it is true that schools and educational materials are VAT exempted in the NTA, however, what happens to that schools buy a vertible product? How do they claim impute VAT, as there will be no output VAT to net off same? Or are schools not supposed to pay any VAT at all?
Oh, okay, got that. So if you have impute VAT with no output VAT that you can claim it, you go and claim a refund. It's that simple. Claim a refund. The answer is very simple. And I spoke on the provision regarding to a refund. You get it within 30 days. So that's one of the interesting things about the NTA. You claim a refund.
Thank you so much. Easy and good. All right. Somebody is asking that you kindly explain the job loss exemption increase to 50 million. Is there any such thing as that?
Job loss exemption. Yeah, I think there's a threshold. Though top of my head, I can't recall if it is 50 million, but there's an exemption regarding job loss, and there's a threshold and all of that. So I think I've read that part. But job loss, it relates to personal income tax, so not to corporate entities. I think there's a provision on that in the NCA relating to exemption of income on job loss for individuals.
Okay, thank you. Yusuf wants to know, he said, the section of NTA discourages patronage of unofficial markets, as explained that official market may be cheaper. Does it mean going forward, the official exchange rate will always be better than the parallel market?
How would I know? It's only the government that can tell us. But if you look at the trend lately, things seems to be getting better. As at late last month, the average FX rate for dollar was 1,420 something, from 1,004 something, from 1,450 something in September or so. So I think things seems to be getting better, and the government is making effort to roll out some policy to discourage the high demand on dollars. So the demand is actually dropping, which reduces the pressure on the US dollars and all of that. So I think, I'm positive. I'm positive from the CBN side. I'm positive. And I'm actually looking forward to seeing dollar at 800 naira, 700 naira. So I would say I'm positive.
Amen. Oh, I'm screaming amen. Okay. Though somebody actually responded to that, it says the threshold is 10 million for job loss. It will be exempted from personal income tax.
Great.
So there's a
Great. Thank
question on free trade zone that we have avoided twice. It says if free trade zones that export 25% to custom bodies are now required to pay CIT, does that also imply that they are liable to VAT because they are currently exempted from VAT?
Yes. So all of the provisions that applies to a company that is in the custom territory will then apply to them. So that's
Can you take that response again, please?
I said the intent of that provision is that for free trade zones that sells above the threshold into the custom territory. So once they exceed that threshold, then the provisions that relates to a company in the custom territory applies to them as well too. So one of them, which includes the company income tax. Do you get that?
Okay. Thank you so much. Yes, we got that. Somebody else is saying is the threshold is not 10 million, no, it's 50 million, no. Thank you so much. We got that. All right. So there's another
maybe someone
question.
should help us check and help us confirm. But I know there is a
Somebody should
threshold,
check.
but I can't confirm the exact
Yes.
amount. That's just it. So that's why
Okay.
I try to avoid it so I don't say the wrong thing.
Okay, we will definitely check it up. Okay, so for venture trading as limited liability company and wants to convert to an enterprise so that only pay is applicable, what advice would you give to such clients? Do you think that's wise?
What advice? So this is more like a business restructuring advice. So I would try as much. I would have loved to avoid the question, but I would try as much as possible to keep it as high level as possible. So your strategic objective matters. All right. So there's no one way to it. I can say something now, and another expert will come tomorrow and tell you that no, they don't subscribe to that school of thought. So I would say it depends on your strategic objective. For instance, we all know the importance of having a limited liability company. It separates your liability. It protects you as a business owner because of the entity concept. Your business is different from you. If anything happens tomorrow, you won't suffer any personal liability. So think about it. Also, if you need funding and you need application for some stuff, the funding and investment space favors companies registered as limited liability more than a business name and all of that. So if you are not looking at it from the tax perspective, all right, so there are a lot of things to look into. The as a business owner registered as a business name, the business itself will not be subject to tax, but the income of the business owner, that is maybe like in terms of like profits that you take from the business or salary that you pay yourself, will be subject to income tax. So that is the concept over there. If you feel that would be suitable for you, and you believe that the portion of the profits that you'll be paying yourself will give you will protect you more and will give you a lower tax liability, then you may want to consider it. But like I said, things like this, you don't look at it from a single lens. This is just the tax lens. You may feel like, oh, okay, I can just pay myself a salary of like let's say 20 million naira per year. Okay, and because of that, your tax rates, your effective tax rate as an individual may not be maybe more than, let's say, 19% or thereabouts, which may be lower than what do we call it? Which may be lower than the 30% if you trigger the revenue threshold of 100 million naira and above. Meanwhile, remember that as a limited liability company, you have a lot of incentives, a lot of allowances that you can claim. Think about the loss relief. Think about the capital allowance. Think about a lot of things that you can as well claim. So there's no straightforward answer to it. So if you are considering this kind of a thing, to be best, you look at your financials, look at your strategic objective, put them side by side, then tick the boxes, then go for whichever one that you think will favor you. And personally, why changing your business from a limited to a business team? To me, I feel you are trying to downscale. I think you are trying to downscale because if you ask me, even firms like KPMG that operate as a business name, they know the the advantage and the disadvantage of it. And one of the things is that the partners in that business, they are not exempted from the risk of that business. So you need to assess yourself, and they remain in that line of business because it is the provision of the law that some kind of professional services should be registered as business name. So if you have the liberty to register as a limited liability company, why not? So, like I said, there's no straightforward answer to it. Look at your strategic objective and reassess yourself and be sure that this is what you want to really do. Don't, because of small tax increase in tax rates, then you now want to go and restructure, go back to all of this. I mean, I wouldn't say, but just think about it and look at it critically. Thank you.
Thank you. Thank you so much, BBM. That was an excellent answer. When I saw the question, I said, why would you want to make such a decision based on tax purpose? So you're right. Go and consider your strategic objective again and have a strong rethink. Thank you for that. So we can only take one more question. I want to say another thank you to the audience. I see that a lot of people have corrected the 10 million and 50 million threat.
Oh, great. Thank you so much.
Thank you for the energy. Yes. So the last question for today, we're speaking to gratuity, one part that interests employees a lot. So we want to know, how will the NTA 2025 clearly distinguish between job loss compensation and gratuity at retirement for tax purposes, especially in the case of early retirement or voluntary exit schemes? Or some people receive gratuity. Do you understand the question? Should I take it again?
Yeah. I think I do. They want to distinguish between gratuity and job loss compensation.
Compensation. Yes.
So I think sort of Richard still touched base on this, and it will be important because for every payment that you receive, there will be documentation that backs it. And remember, I said it is a self-assessed system. So you are the one to tell the government, okay, this is how much I've earned, and this is this. So, okay, so this is a gratuity, or this is not job loss. Oh, this is job loss, this is not a gratuity. And for all of these payments, there are documents. Your HR, there's an agreement that shows that, okay, we are disbursing this amount as either for job loss or whatever thing and all of that. There will be supporting documents. Remember, these guys at the tax office, they're also human beings. So just make sure that you have documentation. Documentation is key. It's not something that is difficult. Anything, just make sure that there are documents backing it. That's all. That's all. If so far there is evidence, I believe. If there's no evidence, I know this this is not in line with faith. I'm sorry. But for we the tax guys or auditors and all, we are big on evidence. Give me evidence and I'm fine. Show me what I see, I believe. What I don't see, I don't believe. You cannot be telling me something is gratuity or job loss. Where's the evidence, Oga? If you can't provide evidence, then the presumptive tax will fall on you, and the tax authority, they will use their discretion. So that's my view on that.
Wow. BBM, you've done exceptionally well. Thank you so much. Thank you so much. You are leaving it as there must be evidence. Nobody should joke with documentation. There are too many things you cannot do for yourself. Go get a tax consultant to look into your books so that you'll be on the right side of the law. Because if you assume the presumptive tax would also be applicable to you. Thank you so much. We have enjoyed the session. I see a lot of people saying thank you. They want the recordings. They have enjoyed it. I see so many people also dropping their email addresses. We're saying thank you. Thank you for sparing time to add to knowledge and to do something about what interests you. I even noticed somebody has dropped the YouTube link for people to go go and rewatch. You guys are just a fantastic audience. Sorry, we will be drawing the curtains in a matter of minutes, but before we do so, it's just ideal that I bring to the microphone one man who has helped us to coordinate this behind the scene to make this happen, giving us all the thumbs up, giving us all the guidance to make this seamless. How would you sit 3 hours in an online meeting and it feels like you've just done 10 minutes? It's because you have the support of experts behind you. So if your hands are not busy with your claps, please spread the love as we bring to the microphone Pastor Nee Oshusoye, our CEC pastor for the Highland Business School, to give us his closing remark and all the other questions you've been asking on how do we get the slides, he would attend to it. Ladies and gentlemen, let's make welcome Pastor Nee Oshusoye as he gives us his closing remark and the vote of thanks for these sessions.
Thank you very much. Yes, thank you very much, Mrs. Fash, for a wonderful anchoring section there. Thank you. God bless you all. It's been an interesting time since we started. I'm sure we have all been imparted one way or the other. Just before I go into the section, we have a feedback form that we would like you to help us complete. We'll drop it on the WhatsApp platform, also send to your email. And I think there's a QR code that can also be projected. If you have the QR code, you can just scan it and help us give us your feedback. Now, the QR code for the feedback for this section. Yes, this is it. Let's take a snap of that, and then we can give this feedback. Yeah, once again, we want to thank, I want you to appreciate all the presenters today. Please just give them an appreciation, a rousing of applause for Mr. Richard Okunla and Mr. Babajide Babatunde, popularly known as BBM. Anytime Mrs. Fash say BBM, I will think in my mind, maybe it's calling VDM, but I think this one is BDM and is able BDM. And he has done fantastically well today, and so is Richard. We have had a rich and enlightening time together. On behalf of the Highland Business School, I want to thank you all sincerely for being part of this impactful section. For me, the Nigerian Tax Act 2025 is more than just a change in policy. It's more than just harmonizations of tax law. It's more than just whether government want to collect more money or not, and so many other debates that we see are out there. For us at Highland Business School, I believe it is a call to responsibility. It also challenges us as business owners, which we are, as professionals. You know, some of us are professional, and also as citizens of this country, Nigeria, to operate with high integrity, to operate with accountability, and also foresight. And some of the things we have learned today is only for us to understand what the law is saying, and not just about compliance, which is really the key thing that I think most of us want to, so that we can be compliant. But for us, it's more about the stewardship, what God has committed into our hand, how are we able to do it right? And the truth is that if you take compliance right, serious, it will lead to business growth. It has been proven. When you do things right, you will tend to do things right even for your own business as well. So for me, there are 3 takeaways, and I want us to just know that this session, what we are trying to do here is to provide knowledge. They say knowledge is light. And the scripture says those who walk in light, they will never stumble. So let us continue to seek and understand, not just to avoid penalties or to position ourselves, but to position ourselves for growth individually and also for your business. So knowledge is key. And I think if you follow the fiscal policy website and all the social media, they've been having a lot of enlightenment program that you can join, or you can go to their YouTube and watch. You will see some of these things are clarified. A lot of people that are doing 1-minute video that are not giving, they are giving wrong information. So don't just listen to 1-minute video or 2-minute video online. Take time out, look for the session that pertains to you, because the tax law is wide. So you may not have time to read everything, but look for materials that focus on the area you think you're having challenges, and then you can get insight into that. Number two is that integrity is not negotiable in business. And I belong to so many professional bodies. One of which is ICANN. Our motto is accuracy and integrity. You know what that means? In business, in career, in your financial dealings, let's be found faithful. Let's do the right thing. If you do the right thing, you are not going to be afraid of anybody, any taskman coming to open your book. You won't be afraid because you're already doing the right thing. And that is how we honor God and you build trust. Okay. Then finally, let's understand that every reform or every change brings about opportunity. So those who can discern the times will prosper in them. Let's see this new tax era, which has come to stay because it has become law, as a platform to innovate, to collaborate, and to expand. Let's not focus on the negative, focus on the benefit enabling you to streamline your business. Somebody reached out to me about last month, a business in Delta State. The father was the one running the business, and when the father died, the mother was running it. They don't have any structure. And like some of the things we learned here, they pay school fees from the account, they pay house bill, they pay all manner of bills that are totally different from the core business. And now they are trying to do things right, because if you don't do it right, the consequence is there. So it's important that we start doing things right. Let's prepare to do the house cleaning before 2026. So at Highland Business School, our vision remains, and which is to raise men and women who combine spiritual depth, of course, with professional excellence, and deliver in the marketplace, bringing light into every sphere of influence. And I believe today's session has also equipped me with practical insight and also divine wisdom to do just that. To our amazing speaker, Mr. Richard, I don't know whether Richard is still there. We want to say a big thank you to you, and to Mr. Babajide, Babatunde BBM. Thank you for sharing your expertise, your time, and to every participant that have taken their time. And I want to really congratulate everyone that have stayed up to this point. We have over 200 of this call. You see, Nigerians and generally people take things that are free for granted. We have people that register for over 1,000 register for this event, but I can see that only maybe 500 are able to join because it's free, you know. But I'm sure that you have attended, you have gained something, and you should also go back and rewatch this section. There are insights or there are learnings that you can pick from there. So as we close, I pray that the Lord will grant you the wisdom to apply all these learnings, grace to do the right thing, and favor to prosper in every good work that you are doing. Let's go out there and be the lights in business, in service, and in the marketplace. I want to thank you very much for your attention, and God bless you. God bless your business richly. See you anytime we have training. Don't forget. Then finally, I want to encourage us to join something. Can you project that flyer? The tax reform, they are doing is training. If you are interested, if you have not joined, if you have not registered, you can do that. I think it's ending on the 15th. We can also send that to you. Say the power of many. That is the tax reform is for professionals, and the eligibility criteria. So that's it on the screen. You can take advantage of this, register for it. They want to train people, and if you have this skill, you can even be a consultant on your own, because what does consultant do? They dispense knowledge. So please make out time and register for this. Go to their website. There's a lot of information on it. We also send it on the WhatsApp platform so that you can, if you are interested, you can join. I think it's free at this level. So please take advantage of anything to equip yourself to get knowledge for the coming days. So once again, thank you very much. God bless you. We are Highland Church. We are based in Lagos. If you're in Lagos, we are based in Abuja. Lagos is 2 + 2 to 3 Kuda Dabiola Way, Ikeja, Oregun, Lagos. Please drop in by to worship with us anytime. Sunday, Thursday, our service day. And then in Abuja too, we are there in Gwarimpa. So look out for us on social media. Follow us for more of such things like this, for empowerment like this. We will do more by the grace of God, and we'll keep you posted. Thank you very much, and God bless you. Have a great day, and get prepared for 2026 implementation.